Let's hope that that's getting it. It says it's streaming.
Is it not?
Well, it's a there it is. I think we're in business now. All right, so as a business owner, you may be eligible for some deductions which are commonly overlooked. That's why we exist, to help you pick up those things. We're going to talk about the tax benefits for business travel, meals, gifts, and other items that typically require some additional record keeping. Understanding these concepts will impact deductions which you may be eligible for and the net result of your tax liability. Yeah, we're talking just about expenses right now. So we're lowering your tax liability. That's the whole idea. Expense it away as much as possible. Also talk about how to apply QBIT, which has been around since 2017. Now, I don't know why they sit there and talk about this like this is some big surprise. Everybody that walks in here knows that they can deduct expenses for driving their car for work. It's just how can you do it? The right way to do it. So if you use your personal car for business purposes, either local transportation or travel away from home, you may be able to deduct certain expenses.
Please don't confuse truck with
Semi.
a highway tractor, because an owner-operator or a lease driver does not get mileage for his truck. I had a guy about 3 years ago come in with a profit and loss statement, basically. Handed everything to me, told me he had all of the receipts and whatnot to back everything up, so I was fine with that. And I'm looking over everything, and he's got, his timeout and all of this other stuff, and I asked him, are you leasing the vehicle, the truck, or do you own it? He's like, well, I own it. I'm like, okay, perfect. He brought me in his previous year's tax return, so I knew where we stood on depreciation. But then he had down like 138,000 some odd miles times business miles. Looking at it, I'm like, I got a question. And he's like, what? Turned it around and I said, what's this? He goes, well, that's how many miles I drove my truck. Okay. I said, then what's this down here for $87,000? Well, that's my fuel. I get my fuel. I said, okay. You do realize that you don't get mileage, right? And he's like, all of my other people have been giving me mileage. I'm like, no. You take actual expenses because it's better for you. You don't get $87,000 in diesel and then 138,000 miles times 60 cents a mile. You don't get them both. You can't take actual and standard mileage rate. That's illegal. And I said, and for you, it's better for you to take your actual expenses because it's going to work out a whole lot better. And he was not happy, but he left there fuming. He said, I should get all my mileage. I drove those miles. And I told him, I said, if you want miles, that's fine, but you won't get credit for any of your oil changes. You won't get credit for any of the fuel that you purchased or anything else. He goes, well, I get all that. That's maintenance. That's repairs. I'm like, but that's all covered under standard mileage.
It's either or, and that's not just for highway tractors.
That's for anybody.
That's for anybody.
But Matt's right. When it comes to highway tractors, you want to take the actual expenses because those things are expensive. They're using oil like nothing.
The
It
average,
also includes cleanouts, tolls,
yeah,
all of that.
Yeah, those are separate. So.
the average highway tractor does one oil change a month, on average. A highway tractor does an oil change every 12,000 miles. If you're not running 12,000 miles a month, you're not making any money.
And it's not as simple as just pulling in the Jiffy Lube and getting the $50 special.
No. If you get to a truck stop that has a maintenance bay in it, has
Like the
repair
Loves up here.
services, Petro, some Flying J's, Loves,
Yeah.
whatnot. A standard minimum fee oil change is $300 to $350. So you're dropping between $300 and $350 every month for one oil change. You know, think about it. Tires. A set of steers, which is 2 tires, is about $3,000. A set of drive tires, which is a set of 8, is about $5,000. You'll replace tires about once a year, so there's $8,000 right there, and you don't get that if you take mileage.
No, and it just won't make up for it.
No.
You know, and diesel is more expensive than gasoline is.
Yep.
And that's not even including the DEF that you have to put along in with it.
Yep. And if you take standard mileage, I can't depreciate that $200,000 truck
Right.
because depreciation's figured into mileage. So, if you've got a brand new $200,000 truck that you're going to depreciate over 4 years, on average, you're going to deduct $50,000 a year just for the truck, the depreciation. You know, that's it. We do not do mileage for over-the-road drivers, whether they're a lease driver or an owner-operator, period. It's just, we don't do it. I mean, we can if they want to pay taxes, self-employment taxes and whatnot, but
If they want to pay more in tax, yeah, we can do that.
typically with all of the expenses that a truck driver gets, that's how a truck driver makes money but doesn't pay any taxes. Or pays as little tax as possible.
So, for the purposes of our discussion today, though, a car is going to be anything that is you don't need a special license for.
Yeah, car or truck.
Car, truck, van,
Under 6,000 pounds.
no
typically.
air brakes.
Yeah. No combination vehicle, no air brakes.
Self-employment offers some tax advantages, but still does not allow a deduction for commuting expenses. Even if you're self-employed, the mileage between your house and your office is a regular commute. You don't get to write it off. But there are ways to work with that.
Let's work around.
There's a workaround.
Remember the business use of a home?
Yep.
So, if you own your own business and you have a factory in Wichita and you live in Newton and you drive from Newton to your factory every day because your factory is where you manufacture your product, but you live in Newton, if your home office for that factory is in Newton, then your business is in Newton, and driving from home to the factory floor is business mileage, not a commute. Now, if at the factory you have offices and a conference room and places where you can meet with potential clients and everything else, that's going to kill your office in the home at Newton because you have that in Wichita. And your commute from Newton to Wichita is exactly that. It's now a commute.
Or since he's taken the wind out of my sails, anyway, my story is that Bob knew a guy in a bike shop here in Wichita.
There you go.
He lived in Augusta. Out in his garage, he had a little office place set up where he did the payroll, where he did all his administrative responsibilities.
You walk to work every
So
day.
he walked to work to clock in and then drove to Wichita to his bike shop. Okay, so his commute's the walk. Mileage is driving to Wichita because he's already clocked in.
Okay, I get it now. Never mind. You
Yeah.
got me confused for a second there.
He'll do his things here in Wichita, whatever it is about, fixing bikes, selling bikes, picking up receipts, ordering stuff, maybe, but generally the ordering stuff is going to happen back in his office in Augusta. And so at the end of the day, he locks up the bike shop, drives back to his garage, does whatever administrative things he needs to do for the day, clocked out, and then walked back to his house. Again, the commute's the walk.
All 25 feet from the
I
garage
was gonna say,
to the
yeah.
kitchen door.
What, 10 feet?
He's never late for work.
I hope not. He's the boss. When he walks in the door, he's on time.
Right?
Whether it's 8 o'clock or noon.
But those miles that he's driving from his tax home, which is what we're going to find out what that really is, from his office in the garage to his store here in town, all those miles are deductible. Along with any miles he did while he was out today, you know. I need to run over to, I ran out of inner tubes and I can't order any and get it here on time. I'm going to run over to Sheila's and pick up some inner tubes.
Yeah.
You can write that off.
Yeah, you got to see the look on some of our clients' faces when we start telling them exactly how to calculate their business mileage.
Yeah. Because they don't realize how much leeway there is when you do it right.
Yep.
Allowable business vehicle expenses depend on whether standard mileage or actual expenses are used. You qualify to use either method. Figure out which one works for you.
There's the catch, though. Tell them about the catch.
I was gonna say, that's the one I'm waiting on.
There's a catch. If you're going to use actual expenses, you're probably going to also include depreciation. So once you lock into it, once you make that decision, you're locked. I can't decide next year, that's a pain in the ass, I'm going to go to mileage. Now, once you start the depreciation, you're locked.
What if you don't start a depreciation?
If you don't start the depreciation, although you should have, you'll be hit for, you'll actually be hit for it if you sell the vehicle because you didn't take depreciation, so you have to act like you did.
Okay.
So it adds to your basis. So that's what you're looking at.
Yeah, but most of the time they don't tell you if they sell that car.
No, generally don't know. I agree with that. But knowing what we know, that's actually what should happen.
Yeah.
So even if I didn't take it, I still, when you sell it, I have to treat like you did.
That's not the catch that I was talking about, though.
Which catch were you talking about?
The catch that I was talking about is I start and I do 2 years of standard mileage, and then I decide, you know what, I don't want to do standard mileage. I want actual expenses. If I started with standard mileage, I can switch.
That's what he
From-
just said. He said if you take actual expenses, you're locked in. You
Okay.
can't switch.
Okay.
Yeah.
Where were you? Were you sleeping over there?
I get it.
I said the magic
He
word.
said
I
it
said
backwards.
depreciation, and everybody toned out.
Oh.
Yeah, he said it backwards.
Yeah, he did do it backwards, but yes. No, he did do that.
Okay, never mind. That was the catch. Okay.
If your
See what I
vehicle's
have to put up with these two?
If your vehicle's used for both personal and business expenses, it's up to you to log the mileage between the two. Any reasonable method will be allowable, but mileage is what they're going to want off the top. It's their easiest one to work with.
And if somebody pays for an app to do their logging of mileage,
That's,
you can write that off.
It's a
Yeah.
business expense.
that's a business expense.
I have a client who does computer software. Runs his own business. Does computer software. Every year when he brings me his mileage, he brings me in his ending numbers, his ending mileage for the year, and then he brings in his total number of mileage run for the business miles run for the year. So since I have his starting from the previous year, I know exactly how many miles he's run. I know exactly how much is business, and I know exactly how much is other. And I'm able to completely fill out that whole worksheet for his mileage. If we just had his business mileage, we could just plug that in, and that would be fine.
Yeah.
But the way he's presenting it to me, and the way I'm able to fill it out, there's, if
There's less question.
yeah, if IRS were to pull it up and look at it, and they would go, oh, starting, ending, business, perfect, and that'd be the end of it. Otherwise, if it's just got the business miles, if you just said I did 1,800 business miles this year, and that's all, then they're going to want to see his records. They're going to want to see his mileage log.
Yeah. And there's a couple of ways that you could reconstitute a mileage log. First and foremost is actually have one. You got a little book, you get in the car, you write down beginning miles, you get out of the car, you write down your ending miles. That's that.
Yep.
Another way is just to keep tally of your job. This is basically what I'm doing because they're for my medical research gig. I know every time that I show that I get a payment, I know exactly. I drove from my house to El Dorado and back. So I just put that into Google Maps, get the mileage, go round trip. I can prove that I was there because I got paid, and that's a reasonable way of reconstituting a log.
That's what I do with my dancer.
Yeah.
She goes from here to Junction City on the weekends, Friday, Saturday, Sunday. And she has a log of the weekends that she goes up, the hours that she worked, and what she was paid. And I just do one Google Maps search from her house to her club. I double it, and I write down the number of weekend trips that she takes, and that's her mileage.
Right? And that's a reasonable way, and the IRS would be accepting of that.
Yeah, because when we put it on her Schedule C and it asks for mileage, how did you figure it? I put down Google Maps.
Yeah.
Because with Google Maps, I'm not saying it's about this. Google Maps says it's exactly 117.3 miles from her house to her job. Now, I round down, I just do the 117 because it makes math a little easier.
Yeah. Let's see. So we have our standard mileage rate, which is easy because we just look at our business miles compared to anything else. Actual expenses include the cost of gas, oils, repairs, insurance, depreciation, license tags, all of that. But your complicator is if the car is used for both personal and business, you can't take 100% of any of those. You have to come up with a percentage between personal and business because, tell me that oil change is just business related. You can't. The insurance certainly is not. The license plates aren't because that's for the entire year. Now, you might be able to prove, I might be accepting on the gas a little bit if you give me the right story. And that's basically, I top it off every time I top it off every time I start driving for business, and then I top it off again every time I stop driving for business. That second receipt's actually my actual expense. It's acceptable.
Mm-hmm.
That would work. Pain in the ass, but yeah, it would work.
It's the one thing that I do that Shane doesn't like, but I can justify it somewhat, is for my gig drivers, guys that are doing Uber, Instacart, something like that. They'll come in and they'll say, well, I had a blowout while I was driving, whatnot. I had to go get a new tire. They're taking mileage. Technically, that's covered under the mileage. But I'm inclined, because it's business related, as far as I'm concerned, if they paid $100 to get that tire replaced, I'll give them credit for 50% because that's what they're using the car. The car's half for business, half for personal. And I give them 50% of that repair. Now, if they go and get an oil change, I don't do oil changes or anything like that. If they go to Club Car Wash and they have the car washed and they detail it, whatnot, I'll give them that. Because that's not something they have to do on a personal level, but something that they are expected to do if you're driving for Uber or Lyft or Instacart or DoorDash or any of that, is keep your car clean.
Yeah, you don't want to show up at somebody's house with
With a dirty car.
And groceries in it.
Yeah. So, but Shane and I differ on the repair thing.
I disagree on Matt's replacing the tire. Now, if you tell me that you just got it plugged, and because you had a blowout while you were on duty,
I would want to know how bad it is. Did it split the sidewall? Because at that point, you can't patch it.
I know, but now you've replaced the tire, so you're back.
Right.
Matt and I have already had this discussion. I disagree with him.
Honestly, so do I, but that's me.
Channing is the sole proprietor of a flower shop. He drove his van 20,000 miles during the year. 16 were for delivering flowers, 4 for personal use. So he can claim only 80% of the cost of operating the van as a business expense. 80% of the gas, 80% of the oil change, 80% of the insurance, 80%, 80%. Or he can take your standard mileage rate. And the IRS is a master of consistency. Basically, once you start doing something one way, keep doing it that one way. Unless you can prove that it's wrong. Like Matt was saying earlier with his truck driver. Prove the guy was doing something wrong. You can't do standard mileage rate and take diesel. You can't do it. That's already part of the formula.
Mm-hmm.
Take the standard mileage rate, multiply the number of business miles by the rate. Currently 67 cents. I'm not aware of a change to that.
I don't think.
I think there is.
I think it-
Hold on.
We'll find out shortly. Because I don't have anything on my paperwork that said it was changed.
I know truck drivers changed.
I know per diem changed, but
Yeah.
70 cents a mile for business,
Yeah, that's what I thought. It went
21
up to
cents a
70.
mile for
no,
medical,
it's up 3 cents.
Yeah, yeah.
and 21 for medical and 14 for charitable.
All right, so 70 cents for 2025.
I thought it had changed to 70.
The standard mileage rate can only be used if you own the vehicle and use the standard mileage rate for the first year the vehicle is placed in service, or lease the vehicle and use the standard mileage rate for the entire lease period.
And they're predicting it to go up for 26 to 71 or 72.
Yeah, I'm waiting to see on that.
Wow.
Cannot use the standard mileage rate if you have more than 5 vehicles in your fleet. Can't use the standard mileage rate if you claimed a depreciation deduction in an earlier year. That includes special and 179. Claimed actual car expenses after 97 for a car you leased. Can't use standard mileage rate if your rural mail carrier received a qualified reimbursement. Cannot use the standard mileage rate if you're not filing your return by the due date, including extensions.
Now, here's a catch. Running my own business, roofing business, and I have 4 vehicles, 4 trucks. In August, one of my trucks died. So I take it out of service. I put in a 5th truck. I put in another truck. When I come in, I'm going to give Shane mileage on 5 vehicles.
Yeah, but you put in a date of when that service ends.
I'm going to give Shane information on 5 vehicles. If he puts all 5 vehicles down, including that the truck that died in May was taken out of service and a new truck was put into service in May, the system will not let me take standard mileage because I have 5 vehicles listed.
Yep.
Even though the date has it.
Even though the
matter.
date shows that it's taken out of
Wow.
service, if it shows that you
I'm
have,
sorry, that's jacked up.
I know.
I know, so you know what the workaround is going to be on that, but I'm not going to tell you.
I know what the work. I know what I did for the workaround.
I know what I would do too.
I added the mileage because this happened with my pastor. He had 4 vehicles. 1 died. He put a new one in. The system said, no, this is 5 vehicles. You can't take standard mileage. I'm like, bullshit. It's 4 vehicles. I ran 4 vehicles for the first half of the year and 4 vehicles for the second half of the year. And the system was like, no, that's 5 vehicles. You have 5 vehicles listed. I said, cool, fine, great, super, thank you. I took all of the mileage from the vehicle I took out of service and added it to the vehicle that I had in service at the end of the year,
That's exactly what I would have done.
and gave him credit for everything.
And
Right.
just delete
And
the
took
one
o-
that's gone,
And took off the vehicle. I just
Yep.
took off the vehicle that
died.
died and was taken out of service.
Yep, that's what I would have done.
But it had me pissed because I was sitting there
Wow.
going, "No, it's 4," and I'm arguing with the system. I called tax support about it,
Yeah.
and they're like, "No, the system reads it as 5, even though technically it was 4. It's 5 different vehicles on the return. It doesn't differentiate." I'm like, "Okay."
Yeah. All right. So whether or not I'm taking standard or actual business-related parking fees, tolls, the business percentage of interest paid on a vehicle loan. However, I would not do that now with the auto interest loan deduction that's available from OBA.
Oh yeah, yeah. I forgot about that. That's right.
Personal property taxes paid on the vehicle can also be deducted, but again, if you're doing personal property taxes and Schedule A, make sure you make an adjustment
Yes.
because you can't do both. Generally, I skip that part. I don't want any red flags.
Yeah, no. If I'm doing property tax or something like that for somebody driving Uber, I don't give. Typically, they're not going to have a schedule. They're not going to have anything for Schedule A. Period. They're not going to be able to beat their standard deduction even on the state side with Schedule A. Typically, so I don't even do a Schedule A if I'm giving them property tax on a Uber vehicle or
Right.
something. I'll give them the 50% of their property tax for their Schedule C. I just won't put anything at all on the Schedule A.
And right now, it's hard to get Schedule A to work anyway because the numbers are so large.
Yeah.
All right, so car and truck expenses can include all of the following: depreciation or lease payments. If I'm leasing the car, I can't depreciate it because I don't own it.
Right.
Tires. Where we have this discussion? Insurance, registration fees, garage rent. More of a New York City type thing, but yeah. Parking fees, tolls, interest on the vehicle loan, but remember, like I said, keeping in mind that there's the new rule, don't double account. Personal property taxes, licenses, repairs, gas and oil.
Those are all actual expenses.
All of those are actual expenses that you may or may not have to adjust based on a percentage of personal use. Now, if the car is only used for one thing, I don't have to worry about splitting it.
Mm-hmm.
And we talked about all this slide back on depreciation. I'm not going to ignore it. I'm going to skip it. For a leased vehicle, I can claim an auto expense deduction used as standard mileage rate or actual, but I can't do depreciation because, again, I don't own the car.
Nope.
If I don't own it, I can't depreciate it. Actual expenses include operating and maintenance expenses. As part of each lease payment that is for the business use of the car, cannot deduct any part of a lease payment that is for personal use, including commuting. Well, that follows along with everything that we've been talking about anyway, so there's nothing wrong there. And we don't really have clients that lease their vehicles. I can think of one guy but he's a W-2 guy.
Yeah, but have you seen some of the lease parameters?
I know, they're ridiculous.
I mean, I'll lease you a brand new 2025 car for $450 a month, but you can't drive more than 7,000 miles in a year. Otherwise,
What?
yes,
They're terrible.
they are terrible. Leases are capped at like 7,000 to 7,500 miles for the year. And if you go over that, for every 50 miles over, it's like $10. So if you did 12,000 miles, which is about standard for an average person driving their vehicle, not going on long trips, you're looking at shooting $5,000 or 5,000 miles over your lease. You know, you take the 10% off of that for, you know, take the 10% off for what you're going to get penalized for. So 500 times $10, there's another $5,000 at the end of that first year of lease that you owe the dealership.
Yeah. Don't lease. Don't lease a car.
Don't lease a car unless you're in a huge city like New York or something like that, where you're using it to drive the 5 or 6 miles a day from your house to your place of business, and that's it. That's all you're using it for.
Even
Well,
with
that
that,
would
I
be
might not be. I'm
anyway.
using the damn subway.
Yeah, and that's the other argument. I mean, there's people in New York that are 5th generation, no driver's licenses. They've never needed it. They have a state ID. What do they need a driver's license for? There's nowhere in New York you can't get to on the bus or the subway or a taxi.
Or an Uber now, or all that.
Yeah, or
It's
an
gotten
Uber now.
easier.
Yeah,
It's gotten easier to get around.
yeah. As soon as they figure out how to make cars fly, it'll be even easier.
Yeah.
I don't know. Then you're gonna have
Well,
air
just-
traffic jams.
Just give it to my wife. She seems to make the car fly.
What's the Scorpio nuts?
I know.
I'm sorry. I go 50 down McLean. I want to get home.
She apologized to me this week because they put up a speed cart on her way on her regular commute, and just driving her over, she realizes how much she actually speeds.
Well, if you think about it, for a Scorpio who's dyslexic, going 50 down McLean is actually 3
5.
miles under the speed limit.
You guys leave disability Scorpio alone.
All right. Cannot depreciate a leased car. Again, it's because I don't own it. If you lease a car for 30 days or more, you may have to include an accusation amount. This amount offsets the lease payment deduction in somewhat the same manner as a depreciation deduction. Again, I'm not worried about this. We just don't have people leasing. Deductible miles may depend on where your primary place of business is located. If you maintain an office at home that qualifies as a business use of your home, when you drive away to deal with anything related to your business, those are business miles. You do not have to have a qualified home office. If you do not have a qualified home office, you cannot start counting your business miles from when you leave the house. Back to the bike guy. This is him. He has a qualified home office. All administrative work happens at his home office. The only thing he does at the bike shops is fix the bikes, sell the bikes, collect receipts to take them back to his home office. He doesn't get on QuickBooks from the office. No. That'd be a violation. And he's not that stupid.
Knock that off. You're not supposed to be cooking.
Though Olivia is self-employed masseuse, does not maintain an office in her home. She does neck massages for office workers. Travels to 3 buildings each workday. It's 10 miles from home to the first 5 from the last back home. Those 15 miles are commuting. Therefore, everything else is deductible. 13 from the first to the second, and 5 from the second to the third. Those are commutes. Excuse me. Those are business miles. Your tax home is your regular place or office, post of business, or regular place of business or duty. Regardless of where you maintain your family home, it includes an entire city or general area of which your business or work is located. So they're talking about something a little bit more. Deductible transportation expenses include the ordinary and necessary costs of business-related transportation within the area of your tax home. This includes from getting from workplace to another, visiting clients or customers, going to a business meeting away from your regular workplace, and getting home from your temporary workplace if you have one or more regular workplaces. These are temporary workplaces that can be either within or outside of your tax home area. Now, granted, I'm not self-employed when I work here, but we're keeping in mind my commute from Park City to here and back again is just that, it's a commute. I would not be able to subtract any of the miles. However, if I'm here and drive over to Rock Road to see Matt, those are
Business.
business miles. I would be allowed to deduct those.
Now, if he was the Z and had a home office at home, and that's where he did all of his bookkeeping and ordering stuff and everything else from, when he drove from Park City to the office, that's business.
So just last week, Brett was up from Tulsa.
Business mileage.
Well, all of that is business miles for Brett.
I think he likes to do that once a year just to
Just
not
to get,
only check on his business, but to get those miles.
well, of course.
Because I know I used to run out to the farm line just to get those miles.
Yeah.
Well, I mean, it doesn't hurt.
I've got a guy that's got three
Yeah, but
three
yeah,
rental
that's-
properties in Oklahoma. And he goes down once every 3 months
To check on.
to check on his properties, make
Yeah.
sure there's nothing broken, make sure everything looks good. So once every quarter, he gets all of the mileage from here down to his properties in Oklahoma and back.
That's just like if I wanted to go stand in a field, look at my oil wells, and go, okay, they're there, and drive home.
This is true. A
It's
lot of what we're
miles.
talking about today is not Schedule C specific.
Mm-mm.
Although it's framed in the framework of Schedule C, everything that we're talking about today can also apply to Schedule F. And farmers, their house is their tax home.
Yeah.
Special E.
Schedule E also applies.
Mm-hmm. That's my guy.
That's me too. If I drive down and look at my oil wells.
Mm-hmm.
Not that I'd waste my time, because I don't even think I could find.
So Betty attends a 3-day training course in the same city as her business. That's where her regular workplace is. Betty travels directly from her home to the training site and returns each day. Because the training course location is considered a temporary work site, she also has a regular work site. She can actually deduct the cost of her daily round trip transportation between her home and her temporary training location. So technically, if I needed to fill in for Matt for a week at Rock Road, I could treat that as business miles.
You'd have to come over here. first.
No, I don't,
No.
because it's temporary. I see where you think that, but since it's just a temporary thing, no,
Yeah.
I wouldn't have to.
He could claim it from his house to Rock Road.
I get to claim it from my house to Rock Road and back again. Because it's temporary. Again, I'm not self-employed, I don't do Schedule C, I can't do that. But, back in the days of 2106, I could have.
Oh yeah.
And I did. Bob held a meeting at Spears, but it wasn't until 9 o'clock. I typically get here at 8 so I could do some back office administrative stuff. So I left from here to go to Spears for the business meeting. And I don't know that much business got taken care of. They had a nice breakfast. I forgot Spears actually did breakfast, and it's not half bad.
Yeah, buffet style, I like it.
It wasn't that day, but still.
I think on the weekend, Saturday, Sunday, they have a breakfast buffet, brunch buffet thing.
Yeah.
Who's that?
Spears.
Yeah, they do on Sundays. It sucks. It's horrible.
Don't drink the breakfast drink, go then. It's possible.
I mean, you get a free piece of pie, but everything else is just.
Some things would be hard to keep warm. I'm not sure that I'd want buffet pancakes.
Yeah, and it's like biscuits and gravy and sausage and fruit and I mean it's just not that appealing.
Not much on it.
No.
Expenses for local business transportation include the cost of transportation by air, rail, bus, taxi, etc., and the cost of driving and maintaining your car or mileage. Also include the cost of parking fees when visiting a customer or client. That ain't free. Local transportation expenses do not include expenses you have while traveling away from home. Those are travel expenses. Doesn't mean I can't take them. Just means that they actually go someplace else.
So when Brett comes up here from Broken Arrow, Tulsa, basically, he comes up 412 to 35. 412 is a toll road in Oklahoma. So the fee that he pays going from Broken Arrow to I-35 to come north, and what he pays from I-35 back to
Kansas.
Broken Arrow on
And
that
don't-
toll road, that toll fee going and coming, he gets to take off.
And don't forget his portion of the Kansas Turnpike.
Yeah, you
also.
got Kansas. Too.
Yeah, and
And-
Turnpike.
I will also entertain a percentage of his Pike Pass fees.
Oklahoma doesn't have Pike Pass fees, do they?
No, the
Is that what the K
so
tag is?
the K tag
K-tag's free.
K-tag is free.
Well, it depends.
No, it doesn't. K tag is free.
Yes.
It is completely free. The only thing that goes on your K tag account is your
The
actual tolls.
Yeah.
So, and you can use K tag in Kansas, Oklahoma, and Texas, and Colorado.
And Florida.
Can you use K tag in Florida too?
Yes.
Okay. So, if you've
And
got
at Kansas City International.
if
for
you
parking.
if you've got a K tag, and you hit a toll road in any of those states, that charge you can actually take off as a business expense.
I agree.
But what fee are you talking
Yeah, what fee are you talking about?
I
'Cause
have
it's-
an actual hard case transponder, not the
Oh.
sticker. I have to pay $1 a month. I will
Oh. Okay.
That makes sense.
He still has a K tag from 15, 25 years ago.
consider. Yes.
Back in the Stone Age.
You can't change those.
Yes,
Yeah, you can.
I could.
Yeah, you
But
and
why?
save $12 a year.
It'd be nice to be the only one with something.
Yeah, but
like
now
that.
I don't have to worry about trying to maintain two accounts or anything like that. I just take it out of one car and put it in the other.
There you go.
I have K tags on both of my vehicles, and they're on one account.
Yeah.
I know, but okay. Well, I still don't have to worry about it.
Yeah, you just register the tag that K tag goes on. And it goes on one account.
Mm-hmm.
My system has been working since 2010.
Oh,
I have a K tag, but I don't use it, so I don't know.
Because it was
You never
also
know
handy
you
when I
run
was
out.
driving the motorcycle.
yeah.
I don't have a K tag, but I should.
So get a K tag for your motorcycle. You can have 15 K tags. If you've got 15 vehicles, it's all one account, and it doesn't cost nothing.
I don't have to worry about some stupid sticker.
Once
I
you
have
put it
fiber,
on,
but
you
it's
don't
in
ever
my-
take it off. It's not like they expire.
Well, I still have my.
That's all.
The only time you got to take that off is if you sell your motorcycle to me, you take your K tag off. I'll go order another K tag and slap mine on there.
Community expenses are those incurred from getting home to your place of work or your first business location of the day and back. Which is kind of silly because we talked about temporary business locations. So, really, in one regard, if I'm going to my first client, I really need to go to the office first.
Mm-hmm.
It used to be if we were working here and we got called to the Maple West office when we had it,
Yeah.
we could write off that
You
mileage.
could,
Yep.
as long as you came here first.
Right. But like if I was sitting here and Susan called and said, hey, can you send somebody over? And
Yeah.
I went, I was able to count that mileage.
You were, but
You
if
just-
Susan called you at home and you went
Yeah.
straight over, you
Yeah.
couldn't.
Bob,
And that's what that said.
when he did that with me, I just got to stay on the clock.
Well, that
Well,
too.
that too.
That's typically the way we handled it. That way you didn't have to worry about
Doing mileage.
Yeah.
Well,
doing mileage.
But that also might have been when mileage quit.
Oh, when we lost the 2106?
Yeah.
Yeah, that would have been.
How long was that?
2017.
That's the year I started.
Yeah. So you would have been able to write it off anyway.
Mm-mm.
Charles travels from his home to his place to work by train. He works on reports during the trip. The fact that he works does not change the fact that it is a commute. He can't deduct the daily train. Now again, if he got a little bit more creative about what he does at home, there's some room here.
Mm-hmm.
Also, putting advertising material on your car or hauling tools or instruments in your car does not change the use of the car from personal to business. I don't care that you slapped Matt's tax service on the car and drove it around.
No,
Those aren't business miles.
Well, that's advertising.
no.
It's advertising, but it ain't business model.
That specifically got shut down in 2020 when people were trying to do that. That was a big thing. I remember that. I'm saying it like it was decades ago. It was only 5 years, but still.
It feels like forever.
Yeah, it feels like forever ago. But I remember that people were trying to make extra cash. And that was one way that people were saying, well, this is how you make extra cash.
I drove
And then
7.
they specifically said, and you can subtract the mileage. And the IRS came around back behind that and said, no, you
No.
can't.
Nope, you can subtract. You can subtract what
cost.
you paid for the magnetic stickers,
Yep.
and that's it.
Yep.
It kind
If
of
you paid someone to drive for you,
Nope.
nope,
the vehicle.
nope. Now,
It'd be their
if
job
you
to
went
drive.
out, and you bought a straight truck, like the 14-foot U-Hauls,
That used
And
to
you
have
had-
the banner.
and you have a digital banner
Yep.
put on either side,
That's different.
and you are going to businesses saying for X amount of dollars, I will put your advertisement on my trucks, and we drive all around Wichita. That's what we
Yeah.
do. That's a business expense.
Because that's what you do. The only reason why you're driving the truck is
to make money.
to be seen,
Right.
to make the money, to drive up and down the main drag. It's not to go to Dillon's to get milk, which
Yeah.
is what these guys were doing. You put your magnet on my car, and then when you drive to Dillon's, they said, when you drive to Walgreens, when you drive to the doctor, those are deductible miles. No, they're not.
Yeah.
Those are personal miles. The fact is, you stuck a magnet on your advertising, eat at Joe's and get gas. Irrelevant.
Yeah, they were trying to say that as long as you had that business banner on the side, anytime you got in the car and drove it around because you were advertising the business, that's business miles. That's basically the same thing as going in. I take everybody here out to eat, and we sit down and I go, meeting of Everyday Tax Solutions is now in order. Order your meals and eat, and then I turn around and I claim it as a business meal.
Eh.
That's not gonna that's not gonna fly.
All right, some other things that I can't deduct because they're regular commuting. Parking fees at my regular place of employment. Carpool costs. Nope.
Not unless that's exactly what your business model is.
Yeah.
Is going and picking up people and taking them from their homes to their job.
That would be
a business again.
Yeah, now you're back to business again. Most taxpayers can use the following illustration if determining a local transportation are deductible. Man, this thing's been around a long time.
Ooh.
This is one of the few I can remember from the first time I actually taught this class,
Yep.
back in 2011. Actually, the first time I took this class in 2010. Bob had an EA that he knew that was retired from the business, but she was still an EA, and she taught the basic class before he opened his store down here. And then I taught the basic class that spring. So she only taught I taught the rapid class that spring.
And after that, you were just the instructor.
After that, I did both. So I've taught every class that we had except for the absolute first one. I've done every rapid class. And this chart was on both of them. So we have our never deductible home to regular place. Or if I'm going home to wherever I'm going. This one's never deductible from like second job back to home. This might be deductible because it's temporary. Like you said, if I was going to Rock Road for a short time because I needed to. That could be deductible. These are always deductible. It doesn't have to be a job, too, if I was going to training. If I was taking classes at Wichita State at night to better my job skills. If I took an accounting class from Wichita State at night, that would actually be a deductible mile. Travel and meals related to business are deductible. Lodging and transportation expenses connected with overnight travel for business a while away from your tax home are generally deductible. Reminder, your tax home is your regular place of business or post of duty regardless of where you maintain your family home. Which doesn't make a lot of sense at the moment. Let's hope that they left a slide in that actually does clear that up. And they did. Sean's regular place of business is in Derby. It's 4 hours away from her home in Runyon. She chooses to rent a home in Derby and return to her family home on the weekends. Her tax home is in Derby. She cannot deduct any of the expenses related to her travel between Derby and Runyon. Nor can she deduct the expenses of maintaining the home in Derby. Because that's her tax home. Can't do the rent, can't do the food, can't do any of it.
Nope. But I did have a truck driver who was a lease driver,
Yeah.
lived here in Wichita, and when he came off the road for his week off, his yard, where he left his truck for maintenance, was in Chicago. But because he did all of his administrative work out of his home, out of a home office here in Wichita, his travel from Wichita to Chicago and from Chicago back to Wichita, no business mileage.
There's a lot of leeway if
On
you're-
his personal vehicle.
There is more leeway if you're somebody that's subject to Department of Transportation regulations.
Yes.
There's more leeway on some things. And because I could say the same thing, I have a cousin who the family home is in Mount Carmel, Indiana, and she works in St. Louis. I can't do anything for her. I couldn't do anything for her if I were doing her taxes. The St. Louis stuff is the St. Louis stuff. That's her tax home. And the fact that she drives from St. Louis to Mount Carmel, which is Indianapolis, basically, can't do anything with that. That's her choice. They just didn't want to uproot the family.
No, it's just like people on the East Coast taking a train from Virginia, somewhere in Virginia, to New York because they're a stockbroker. They live in Virginia because it costs a third to live in Virginia as it does to live in New York City. So they get on a train and take an hour and a half commute to New York to go do their business and take an hour and a half commute back home. If they drove it,
Forget it.
if they drove it, it'd be a 3-hour, 4-hour trip each way. But if they drove it, you still couldn't give them any mileage for it because their tax home is New York City where they work. So it would be classified as a commute from Virginia to New York and New York back to Virginia.
If you're traveling away from home and required to be away from the general area of your tax home longer than an ordinary workday, you need to get rest or sleep, I can start talking about deducting meals.
Yeah.
But if you're going to make it home today, or could be expected to reasonably make it home today, can't do anything for you. You maybe decide to call it a day short. No, you could have made it home. Sorry, can't help you. Will drives the truck. He leaves the terminal and returns to it later the same day. He gets an hour off for lunch. Because the time off is not necessary for sleep or time for an adequate rest period, the trip is not travel away from home. The fact that he stopped off at Mel's Diner can't help him.
Yeah.
Can't do anything with that. He might as well brown bag it. Or unless Mel's got really good food. Betty lives and works in Appleton, Wisconsin. Lord knows why. It is necessary for her business that she attends a week-long conference in Los Angeles. Lord knows why. Because she'll be gone longer than an ordinary workday and will require time off to get necessary sleep. I can do something with her meals. I can also do hotel and airfare.
Well, if Shane and I were Z's and independently owned our offices, and we decided each year that we were going to fly from Wichita to Virginia Beach for convention,
Yeah.
the airfare out and back, the hotel stay there, half of our meals there
Yep.
would all be business travel expenses. Even though we technically aren't required to go to that convention, because we do go to that convention to get knowledge on what's coming up in the new year, everything else, touch base, network, whatever, we can take it as a business expense.
It's not required, but it is strongly recommended.
Yes.
And it's even strongly recommended for Z's to bring their
Office.
high leverage people. And that rotates around. I think it's back in Dallas again this year.
It was
in Virginia Beach.
this year, wasn't it?
This year, well, yeah. By this year, I mean next year already. But the next one, I think, is going to be back in Dallas.
No, okay.
So in that case, I could take my mileage because I'm going to drive to Dallas.
Oh yeah.
I'm not
Yeah, I
flying.
wouldn't fly to Dallas. No.
I'm gonna fly the ride.
No.
I'd rather drive than fly
I'd rather
because at least
drive.
I still have a car when I get there.
Yep. And
Yeah.
if I wanted to go somewhere, I can.
Yeah. And it's all business.
Yeah,
Oh,
exactly.
road.
It's not that bad.
It's an 8-hour trip from here to Dallas.
Please. 6.
Right?
It's an 8-hour
The way
trip.
I drive,
It's
6.
an 8-hour trip from here to Dallas.
I can get
if
to-
you
I
drive
can
the
get to
speed
Tulsa
limit.
in 2.5
If you do
hours.
your +5 or your Texas 10, it's about 6.5.
That's about right.
Man, that could
I
be
can
big.
get to Tulsa in 2 to 2.5 hours.
Okay, so can I do in the speed limit?
No, I go 90. Like their speed limit is 80 down
On the toll roads.
Where?
Well, but you could
there.
do
On the Cimarron Turnpike.
in Dallas?
no.
Oh.
In
on the
Tulsa.
toll.
In Tulsa?
Yes.
It's
I want to
80?
say that's
It's
a
80,
full
yeah.
gear 80, but I do 80.
Turnpike speed limits are 80 in
In,
Oklahoma.
in Oklahoma, yeah.
So you can, from what I was told by a Minnehaha County sheriff,
Uh-huh.
it's 10%. Now he can give you a ticket for driving one over. That's technically speeding. Can't count it toward his quota, and they have quotas.
Oh, I know they do.
Don't believe them when they say they don't.
I know they do.
Anything less than 10%, they don't get to count.
So if you're going over.
So if you're not doing
9
8,
miles over,
they get to count that.
yeah.
But if I'm doing 7 miles over, they can pull me over, write me a ticket, but it doesn't count as their quota.
Correct.
So they ain't gonna waste.
That's
their
why I
time.
do my +5. Well, in Kansas on the Turnpike, I'm doing +7 because it's 75.
Should not tell the speeder that stuff.
What you-
Dude, I go 90, 95.
Now
down the
again, I
road.
told you.
Let me
They can pull you over for one, and it's a ticket, yes, but they just can't count it toward their quota.
So
Right.
it's whether or not do I
Don't
really
don't be
wanna
one of
waste
those
my
crazy
time.
people that sit there and say I'm allowed. 'Cause no, you're not.
No, you're not. I didn't say that. I just
I
told
do
you.
10 over anyway.
Yeah.
I don't know. Lately on Kellogg, I've been going 70, 75.
Kellogg, I know where all the cops are. So.
Yeah, me too.
Especially those dirty
It's like the
little
other day I was
motorcycles
coming
are-
down with Clayton and Kelly goes, I said, there's a cop. He goes, where? I said, right there behind that tree. He goes, no, there isn't. I said, yes, there is. He went by and he goes, oh shit, there is.
All right, so when you determine that you're traveling away from your tax home, you can determine what the expenses are deductible. So transportation, plane, train, automobile. You take a limo, you take a Uber, a taxi, all of those things. Baggage and shipping. Yeah, I had to pay that extra baggage fee because I took that extra bag, and the airline charged me for it. Okay, well that's just an expense that I can write off. If I ship it, hey, I'm gonna show them I don't have to worry about paying the extra baggage fee. I'll just mail it to myself.
That would be stupid, but okay.
It depends.
I'm not
Yeah,
mailing
a lot
my
of stuff
golf
on
clubs,
from-
damn it. I'm paying the extra baggage fee so my golf clubs get there the same day I do.
Well, I might do that considering, but hey, I'm down here and I'm getting a bunch of crap at the convention and I'm gonna be overweight, so it'd be
That I
cheaper
would
for me
ship
to
home.
mail me back my dirty laundry.
That's what we did from Italy.
No. You don't mail back your dirty laundry. The night before you leave, you set it all out for laundry service. And then in the morning when you're packing, you pack clean laundry in and you go home. Because laundry service is an expense.
Okay. Lodging and meals. Your lodging and non-entertainment related meals for your business trip is overnight or long enough that you needed to stop for rest to perform your duties. Meals include amounts spent for food, beverages, taxes, and related tips. There are some rules still that we haven't gotten to. And again, we're talking about reasonable. Not going to the most expensive steakhouse in town and then writing it off.
Which is the reason why I do not give my car dealer any of his meal receipts when he goes to Denver, when he goes to Texas. Because when he goes out to eat, he goes out and he will drop $200, $250 on dinner. And I'm not going to sit there and tell him, well, we have to take the $60 worth of alcohol off, because that doesn't count. And the fact that you paid $135 for a 32-ounce prime rib tomahawk, you only get $50 of that. So you go eat where you want, just don't bring me any of the receipts.
Yeah, and Matt does bring up a good point. Ye old days of 3 martini lunch don't count. It's here, cleaning and dry cleaning. That's fine. Telephone, business calls while you're on your trip. This includes business communication by fax machine, other communications devices. You went down to the business center in the Hilton that you're staying at and paid for it. Well, that's actually an expense that you can take. Back in the days of roaming. Remember those crappy days?
Roaming fees.
Roaming fees would have been good. So if you actually go international, and your plan didn't cover at least that country, that would actually be an expense. If I went to England, I'd probably have to pay extra. I think Verizon has a contract with Bell in Canada, so I don't care about that.
On the cruise ship, it's $5 a day.
Yeah, but a cruise ship is pleasure, not business, and you can't claim the cost of the ticket for a cruise ship as a business expense.
Yeah, I'm going to have a hard time with that one.
Even if, as a Z, at the end of the season, let's say at the end of the season, I cleared $500,000 after all of my fees, and I decided I'm taking all of my employees on a 10-day cruise.
Pass.
I can't write that cruise off as a business expense.
Yeah. At best, you can do the $25 gift.
Yeah, if I took 10 people, I could take $250 off for a business gift. That would be it.
You can deduct the cost of meals if necessary for you to stop for substantial sleep or rest to perform your duties while traveling away from home. Even if they're not subject to DOT time, use that as your basis. So if they're out for 8 hours and can't make it home, even though technically they could drive 24 if they wanted to, if they stop, I'm fine with it.
If you have somebody asking about this, I recommend the DOT standard, which is 100 air mile radius from their home. So from Wichita, if they are within a 100 air mile radius, they do not get business meals.
Right.
Because even with DOT, if you are within 100 air miles of your yard, you don't have to file a logbook at all. You don't have to keep electronic logs, nothing,
Yeah,
because
but-
it's considered that you will be back home at your yard at the end of the day.
Yeah, but we had one of our truck drivers, he was in Hutchinson for 2 or 3 days, waiting on a load,
Right.
and we counted him out.
Yeah, but that would be a different story. He is gone and away from home and can't leave. It's not like he could
Right,
drop his
right.
truck and then come back home.
Right, right.
He had to be. That's a completely different story. But if he'd have driven from here,
To do a paint job and then come back.
well, yeah,
home.
if he'd have left from here and went to Haviland and did a paint job, and on his way back decided to stop off in Pratt for the night, he's within 100 air miles. He doesn't get to claim that as a business expense. He could have
Right.
taken the extra hour, hour and a half to get home, so he wouldn't be able to claim that as a business expense.
You cannot deduct expenses for meals that are lavish or extravagant. Expense is not considered lavish or extravagant if it's based on reasonable facts and circumstances. So they're saying meals will not be disallowed merely because they're expensive, or because the meals take place at deluxe restaurants, hotels, or resorts. And part of that makes sense, you know, if, like, 2 years ago, the Liberty Tax Convention was at the Gaylord in Nashville. And the reason why they did that is because basically they made it so you didn't have to leave. Everything you needed was there. Of course, they're going to charge you a premium price. So, yes, that steak would have been more expensive because I chose to eat it there, but it doesn't count against me because I was kind of stuck there.
Yeah.
You can figure meals expense using one of the following methods: the actual cost or the standard meal allowance. Regardless of whichever method you use, add up your totals, divide by 2.
Talk them into having the next convention at a casino hotel. Come on.
That's where Capitico's having their party.
I don't want to sit there and
Christmas
try and deduct, work around gambling winnings and expenses. No, thank you. You only get 50% of your meals because you had to eat anyway. And this is part of the reason why they don't care whether it was extravagant or not, because you're already reducing it by half. And when in doubt, take the standard meal allowance. If you want to avoid red flags, take the meal allowance.
Per diem.
Yeah.
$66.
That one's a little bit more flexible because there are premiums for being in expensive cities. That one I don't use the DOT. I use OMB on that one. Office of Budget Management.
Oh shit. Oh. Oh wow. From October 1st of 24 through September 30th of 25, per diem within the continental U.S. is $80. Standard meal and incidental rates is $68,
Yeah.
and standard
I was just
lot.
thinking, I don't know
Standard
where
lodging is
it's
110, but yeah, on here for 2025 fiscal year, The special IRS per diem rate for DOT regulated transportation workers, truck drivers, is $80 per full day for travel within the U.S. and $86 for travel outside the continental U.S. And then I guess after September, starting October 1st of 2025, it dropped back down to $68 per day, I guess.
Interesting.
Yes.
You can use the actual cost of your meals to figure the amount of expense and reimbursement and then apply the 50%. Keep records of what you actually spent. Instead of deducting the actual cost of the meals while traveling away, the standard meal allowance for daily meals and incidental expenses can be used. Under this method, a specified amount is deducted, which is Matt was just telling you about. Depending on where you traveled, instead of keeping records and the actual meal expenses, just keep a log of where you ate and whether or not it was actually business. Where you ate and why you ate. And when you ate.
Yeah.
So, Matt gave us some of this, but like I said, this doesn't apply to more expensive areas.
Yeah, Alaska would be considered outside the continental U.S. So you'd get the $86 a day instead of the $80 a day.
Right. Standard meal allowance can be used if you work in the transportation industry, which Matt has already discussed with you, and we already know those numbers. Yeah, that one's right. $80. If you happen to travel to Canada,
86.
yeah. If your load goes to British Columbia, you get an extra $6 a day. Remember, you can deduct meals for traveling. You must first establish you're traveling away from your tax home. Again, this also applies to transportation workers. Basically, they can't count their last day out or their first day out.
Keep in mind too, just because I went into Canada does not mean I get the outside the U.S. per diem. If I travel into Canada, I go to British Columbia, and I drop my load, and I reload, and I come back, and at the end of that day, I'm back in the United States. You only get the United States per diem. Per diem is marked by where you shut down, not where you've traveled to. So in order to get the $86 a day, I would have to have actually spent the night in British Columbia.
Yeah. Another example of that would be is that I'm in Detroit and I'm going to Buffalo. Instead of driving around Lake Ontario or Lake Erie through Ohio, I decided to take a shortcut through southern Ontario,
Right.
which would be a hell of a lot faster. But I didn't stop in Ontario at all. I don't get my day.
Right. Right. The fact that you traveled through there is irrelevant.
Deduction for a meal expenses that are incurred or is ordinary and necessary in carrying on your trade or business. Qualified business meals may occur within your tax home or while traveling. You do not have to meet the meals traveling away from tax home to take this deduction. Be sure to keep your receipt and document who the meal was with and the business purpose of the meal. Like I said, when Bob took us to Spears, we had a business meeting.
Mm-hmm.
And then breakfast. So he wrote down what we talked about in detail and who was there, when it started, when we stopped talking.
Basically, just like minutes.
Yes.
Yeah, minutes.
Okay.
You want to keep minutes.
Yep.
And then after that, or even before that, or even during that, there's no rule that says it can't overlap. The pancakes came and we still talked about business. That's not a problem.
Nope.
Entertainment expenses are no longer deductible. It used to be I could pay to take the gang out or my client out to the hockey game while we talk business.
Take the Japanese investors to the strip club.
Yeah. You can't do that anymore. And there's really no leeway on that.
Mm-mm.
For business meals that are included within an entertainment activity to be deductible, the bill must clearly separate meal and beverage portions from the entertainment expense. So if you're going to do that, I can't deduct the cost of the ticket to get into the Wichita Thunder game. But after I got in, I started buying beer and I started buying hot dogs. Keep the receipts for that. Again, I need to keep track of what we talked about.
If you're going to do something like that, I am almost expecting to see an itemized expense from a skybox.
Yeah.
Because it's going to be really hard to convince the IRS you were sitting in row 42 on the upper deck holding a business meeting.
Yeah.
Now, if you give me a $1,500 expense report for a skybox that you rented out, and you had a business meeting up there, and you had it catered,
I can deduct the cost of the catering at 50%.
Yep.
And only the catering.
Yep.
Not the rent of the skybox, and obviously not the cost of the tickets.
Nope.
Which are probably in the rent of the skybox. But-
yeah.
And again, it gets even more specific. I don't know if they still included it. Deducted business meals must meet each of the three following requirements: ordinary and necessary. Well, ordinary is a little vague. Necessary. This is what I need to put the cherry on top. Give me the edge. That makes it necessary. Paid or incurred during the taxable year, well, that only makes sense. Not lavish or extravagant under the circumstances. They're leaving that kind of wide open because obviously if I'm courting a doctor and I take him to McDonald's, not so much.
The ordinary and necessary is where they got around a lot of entertainment expenses for foreign investors. When I said you can't take the Japanese investors to the strip club, well, in the United States, taking Japanese investors out to a club like that
Isn't that
was ordinary and probably necessary
I was gonna say,
to
you know,
seal the business
It's
deal.
practically required.
Yes, when they came here, they expected that kind of treatment. Something they couldn't get back home. They expected it here in the decadent West.
Yeah, they didn't want to go to the karaoke bar. They can get that back in Tokyo.
Right.
All right, let's hear. Incurred while you or your employee is present at the meal. I can't just buy a meal for my client and then not go. That doesn't count.
Can't just take them, drop them off, and drop $1,000 bill with the hostess and say cover their expenses.
Yeah, whatever they want is on this. You know, send me a bill for the rest. Here's my card.
Yeah.
No, you got to be there. Or your employee has to be there. Somebody's got to be there representing your company.
Yeah.
Making the pitch.
The owner of the company, not necessarily, but the salesman trying to land the account, almost assuredly.
Yes. Be provided to a current or potential customer, client, consultant, or similar business contact, which, okay, I mean, you're there. You basically met that.
Mm-hmm.
If provided during an entertainment activity, the food and beverage are purchased separately from the cost of the entertainment of one or more bills, invoices, or receipts. I got to be able to break it out because I can't do the entertainment. I got to bust out the food. Joe purchases tickets for a baseball game and takes a potential client to the event. He purchases hot dogs and soft drinks for both after they arrive, keeps the receipt. Sporting events and entertainment expense, so he can't do the tickets, but the hot dogs and drinks, he can. And technically, there's another expense that is potentially available. If he went and bought the guy a hat, he could take off $25.
Yep.
As a gift. But we haven't got there yet. God, this is taking forever.
We haven't even hit Q-Bid yet.
No, and we still have another chapter to go after that. This is the short one. Got to speed this up some.
All right.
Let's hear it.
I'll be quiet.
Business-related meal expenses are taken at 50% because you're going to eat no matter what you were doing. Cost of transportation is not subject to that travel expense, though. I could take 100%, providing that my trip is business related, and I'm not getting a substantial amount of entertainment out of it.
So if you go to Kansas City for a business meeting, do not go to Worlds of Fun.
Yeah, but if I go to the convention, and last time they had it in Dallas, they had you could buy into a meal that was on the playing surface at the Dallas Cowboys Stadium.
But that's part of the convention. That would be completely different.
Right. Although that was part of the entertainment.
So
Or if I participated in the golf tournament. I mean, again,
Right.
that's part of the convention. It's networking.
that's different.
It's different.
But if the convention had been in Houston, and while you were there, because you didn't want to go to the golf tournament, you went to Six Flags over Houston,
Yeah.
that's not.
That's right. I can't take any of that expense. And I have to be careful against that amount of fun versus
Versus the
all my
reason
other
that you,
expenses.
yes, versus the reason you went down there.
right.
If you went down there, stayed a day, the second day you went to Six Flags, and the third day you went home, none of it is going to be deductible.
All right. So expenses treated as compensation in general. Expenses for goods, services, facilities, to the extent that the expenses are treated by the taxpayer with respect to entertainment, amusement, or recreation as compensation to an employee as wages, as to an employee for tax purposes. Reimbursed expenses. If you're an employee, you aren't subject to a 50% limit on expenses for which your employer reimburses you under accountable plans. We talked about that back in Chapter 6. Self-employed expenses. If you're self-employed, your deductible meals expenses aren't subject to the 50% limit. If all your requirements are met, you have these expenses as an independent contractor. Your customer or client reimburses you or gives you an allowance for these expenses in connection with your services you perform. You provide adequate records of these expenses to your customer or client. In this case, your client or customer is subject to the 50% on their. So I can write all of it off because I got paid back for all of it. All right, well, what's the point?
Yeah, because what you got paid back, you're going to count as income.
Right.
So it's a wash.
Yeah. You aren't subject to the 50% limit for expenses for recreational, social, or similar activities, such as a holiday or party or summer picnic. What they're saying is that I could take the entire staff out and rent All-Star Sports for the day. And I could take 100% of that.
Well, but that's the same thing as throwing a Christmas party for your office.
Right.
You can take 100% of that as a business expense.
You're not subject to the 50% limit if you provide meals to the general public as a means of promoting advertising of goodwill. So, if for one peak day out of the tax year, I decide I'm going to call in the food truck, the hot dog truck, and have them park out in the parking lot and say, free hot dogs! I can take 100% of that
Advertising expense.
as an advertising expense. And I know that there are some Z's in a little bit more temperate climate that actually do that. They have the roadside parties.
Oh yeah, I've seen that online.
We talked about doing that this summer.
Yeah, but it only makes sense during tax season, and during the tax season, the weather sucks!
You know, we don't have tax offices in a temperate climate like
yeah, I
Florida.
know.
Otherwise,
I'm also not limited to the 50% limit if I'm actually selling the meals. A little pizza oven over here, and you want a piece of pizza? Great. $1. And I get to write off all of my expenses. Even if
he's
I'm
making money.
doing it at a loss.
Oh.
Because it cost me more than $1 to make that piece of pizza.
Right.
Maybe. But since it's for sale, kind of a loss leader.
Right.
It falls partly under just normal expenses. It also falls under advertising expenses.
I spent $1,000 buying pizzas and got back 500. I can claim that full $1,000 as a business expense.
Well, and let's take it to the entertainment table over there. Brett could write off all the costs of the waters that we buy, all the costs of the pops, all the costs of the
Yeah.
chips, and anything else. And if we bought a pizza, he can expense all of that because it's advertising. There was a day last year I bought a pizza for Shannon. For Shannon.
Sandwiches.
What? Did I get sandwiches? It was sandwiches. I called Domino's and had it delivered.
Yeah, freak me out.
They weren't expecting it. I didn't tell them it was coming. I just knew they were getting slammed and there was nothing I could do about it. And I felt bad. And I knew that they were going to be here late, so I got them dinner.
Yep. I did that last day. Fuzzies, tacos.
Shut up. I like Fuzzy's tacos.
Domino's delivers and I could order from my house.
Well, yeah, but I was at the office, so
That makes a difference.
I mean, they delivered. They delivered everything, but
Yeah, but you guys are close to one. We're not.
yeah, that's true. We are just right down the street.
Yeah, but we didn't get to enjoy it for my first time until after.
Hey, you guys could have gone back there and got it at any point.
We were too busy.
Well,
I'm
that
not even.
that is
You could
irrelevant.
have taken 5. I'm with Matt on that one. You could have taken 5 and say, "Hey, I need a break. I'll be with you in 5 minutes."
I know, but man, it was crazy.
I need to freshen up a bit,
Right.
you know. Or even nowadays, if you just say, "Hey, I'm feeling a little shaky. I know we got a snack back there. I'll be with you as soon as I can."
Right.
And most people are fine with that. If you just say you're a
Yep.
little shaky.
My blood sugar's a little low. I'm diabetic. I gotta go grab a bite.
I
I'll be
usually
right
just
back.
say, I've been here since. Oh,
Right, I know.
haven't
I've
had
been
a
here
break.
since last December.
Yeah. I've been here since 7:30 this morning. Do you mind?
Right.
All right,
know
I
that,
can
but-
get business gifts for my clients, but I'm limited to $25. Doesn't mean I can't spend more. All that means is that I can write off only $25 per client. But per client also includes person, if it's a spouse, and it goes both ways. So it's $25 for doctor. But that's also include Dr. and Mrs. That's a $25 pool.
Yep.
And if both my wife and I are in business, even if they're separate businesses, we're limited to one $25 pool for any shared clients.
Yep.
Even though our businesses are not related in the least.
But that's shared.
Shared clients.
Even if they are related. If I'm a tax attorney and my wife is a CPA,
Yeah.
and as part of her business I represent her tax clients,
Yeah.
then any gift given to a tax client is considered a gift given not just by her, but by me as well.
Yes, so still $25. So just be careful about that. Not that we have clients that are giving out gifts. We don't.
We don't. And it gets even better. Incidental gifts,
That doesn't count.
that doesn't count. I can give out all the $2 pens I want.
I can give out all the $10 cups I want.
Yep.
You want to take 20 of them? Great. I'll expense them all.
Yep.
Because that's actually advertising. As long as my name is on it.
I have a client who owns 17 apartment complexes, and I buy a box of 5,000 pens with my information on it, and I give it to my client. I can write off all 5,000 of those pens as a business expense.
Yeah. I could do more expensive stuff as long as that my name is on it, my address is on it, that type of thing. And I'm calling it advertising. And when you start thinking about some of the stuff that you see, if I bought shirts for the entire apartment complex, I got them a Liberty shirt. Here, wear this. And when you come in and do your taxes, I'll take 20% off if you wear the shirt when you come in. Or even better, show me a place where you hashtag the shirt and posted it to Facebook or Twitter.
Yeah.
That would be smart, actually.
Yeah. Here's a shirt. shoot a selfie, hashtag my office in it in your selfie. I'll give you $5 for every one you do.
Yeah. That's not a bad idea, actually. That's not a terrible idea.
No, it's not.
Incidental costs such as wrapping, insurance, and mailing are not included in determining the limit. Again, those are incidentals. It's the gift itself is limited to the $25. If it costs me another $50 to insure, I can take all 50. That's not a problem. If it might be a gift or an entertainment, the IRS says it's entertainment.
Yeah.
However, if you give the customer packaged food or beverages you intended the customer has to consume later, treat it as a gift. Okay, here's your Hickory Farms meat box.
That's a gift.
That's a gift. I'm thinking the same thing. Let's hear. I haven't seen one yet, but I think I'm going to hit one this year. It's been a while.
I was gonna say,
They actually have it at Walmart.
I was gonna say, I thought I
in the
did
gift
they?
sections.
like Thursday or Friday. Karen and I were in Walmart, and they already had all that stuff out.
Yeah,
Shit, I need to look.
they had Hickory Farm gift sets in the holiday stuff.
Yeah.
Okay.
I didn't get that far.
It was on the very south side of the holiday stuff.
Right.
Yeah,
I
Yeah.
got as far coming from the pharmacy.
But what I want
I
is
got
that
as far as
5-pound
that
bar
gift
of
set.
Hershey's chocolate. I'm just kidding. Just kidding.
I ordered a s'mores kit from Walmart. It came with the marshmallows and the chocolate and the graham cracker.
Yep. No, they have a long thing of Reese's peanut butter cups. But they got a
Oh, God, I know.
5-pound bar
Yeah,
of Hershey's chocolate.
I've seen that at World Market.
They also had a like cookie jar,
Yep.
not the color of your shirt, Snoopy on it.
Yeah.
Yeah, but he's not doing anything Christmas.
I try to avoid seasonal stuff.
See, not me, but my stuff is kind of.
Your stuff is seasonal.
I seen her thing and I sent her a message real fast. I'm like, and then that was
There were
the
only
last-
like 3 or 4 there.
So basically, anything that we've talked about today, keep exacting records.
Please.
When, who, why, where. You're going to want all of that. Because if the IRS basically looks at this and you don't have enough documentation, entertainment, they're going to throw it out.
Yep.
And again, we don't have a lot of clients that are doing that. We don't even really have clients except for her Japanese guy that's even taking his employees out to dinner.
No, you see,
I know. It's different, but at the time, he was the only one that was doing it
Yeah.
until we
yeah, shut him down.
talked to him about what he was actually doing. You include the unreimbursed of education expenses? Well, okay. Again, I could do this here. I could take the education credit. We've already talked about this. I talked about this on education credit day.
Of course, if I'm paying for my employees to go to take a class or whatever, even though it's going to benefit my employee, but it's also going to benefit my business, I can take that as a business expense.
Right.
So if I send all my employees to Wichita State for 3 classes and I pay for all of that, I can take that as a business expense.
Right.
And that would probably be the better spot to do it.
It probably would because it'd be stronger as an expense than it would be as a tax credit.
Yeah.
You know, and it's not necessarily unreasonable. You know, I decided that I own a tax office. I want to get more into an accounting, so I pay for my 3 highest employees to take the accounting classes,
Yeah.
even if they're just auditing them. I can write it off. Starting in 2018, individual taxpayers who have a qualified trade or business may be able to deduct 20% of their net income from their taxable income. All this does is help their their income tax. It does not change anything about self-employment tax.
Yeah.
Business activities eligible for this deduction include self-employment from Schedules C and F, rental income from E, and some sources of income from S corps that were reported to you on K1 and went through the Schedule E.
Mm-hmm.
All right, so the deduction is 20%, up to 20% of the net business income from each qualified trade or business activity, subject to limitations. Factors that can influence these limitations include taxable income, net capital gains by the type of trade or business, W-2 head wages paid by that business, an unadjusted basis immediately after acquisition of qualified property. Deduction is available whether you itemize or not. It's a 1040 line 13 item. Already talked about that. Specified trade or business do not qualify for the qualified business income deduction unless they meet one of the following exemptions. Your taxable income before the QBI deduction is not more than those numbers. Your specified trade or business is a qualified trade or business and thus may be generate eligible income for QBIT. If your taxable income before QBIT is more than those numbers, an equitable percentage of service trade or business is treated as qualified trade or business. So there are caps to it, is what we're saying.
There's a phase out.
Yeah, phase out and a cap,
Mm-hmm.
which is common. We've seen this before. The specified trade or business is any trade or business where the principal asset is the reputation or skill of one or more of its employees as demonstrated by receiving fees, compensation, or other income for endorsing products, for using their image, likeness, signature, voice, trademark, or other symbols, for appearing at an event or radio or television or another media format. So, great example of a specified service trade or business where a principal asset is the reputation. Air Jordan.
Yeah. Professional athletes are SSTBs.
That's the easy one. You know?
Lawyer,
doctor,
doctor,
architect. Where, their name means a lot more than,
CPA.
yeah. Dentist, it could get it, but it's not quite us because there's no one name associated with this
Right,
activity.
right.
It's liberty tax, so there is nothing. It's not
Liberty,
not-
Liberty Tax Corporate
is the name.
is the name. They would be the SSTB. The franchisee who owns the individual office isn't necessarily the SSTB. Corporate is.
Yeah.
Because corporate is relying on the Liberty Tax name and reputation to generate income.
Right.
To a small degree, so is the franchisee. But there's a disconnect.
Yeah. Just because of the fact that I unfortunately show up on TV quite a bit. And I do mean that unfortunately.
Yes. If you get a phone call from a news organization wanting to do an interview, Shane is our media talent.
And for some reason, Shannon disappears when that happens. She runs far away.
Yeah.
And Matt just straight out denies it because who contacted me last year? Cake, wasn't it?
All I know is I was like, I'm not
Cake or
being-
KSN channel? It was either
It's
channel 3 or
Cake.
channel 10. One
All
of the
I know
two.
is
And it was just at the end of a day of I think it was during rapid class.
I think so, I remember that.
Yeah.
All I know is
I
I
heard they
magically
called her a
disappear
rock
like a
dog.
leprechaun.
You came in for some reason and mentioned it.
Yeah.
So these are businesses that might rely on the reputation of the person of a name. Doesn't mean that it's actually true. It's just that this is where you start. Cubic is the lesser of qualified business income component plus your real estate investment trust and publicly traded partnership, or 20% of your taxable income, including your net capital gains. And if your taxable income, not including Cubic, is too high, Cubic may be limited. We already saw that. We'll focus on the most common part of Cubic throughout the discussion, unless otherwise, taxable income will refer to AGI minus standard itemized deductions. Net capital gain is the qualified dividends from 1040. We already know that. It's not required to if well, so we already know all of that.
Yeah.
So we have to figure in our net capital gains to figure out whether or not we can do Cubic. Because if we have too much capital gains relative to other income, especially if we discount it to 20%, we might accidentally trigger
AMT.
alternative minimum tax, and we don't want to do that. So you might not get Cubic because if you did, it triggered AMT, which is an even bigger problem. And so you don't qualify, but that's actually a good thing at this point.
Mm-hmm.
So here's our phase outs and limits.
Most all of our clients fall in the bottom.
Most of our clients qualify for Cubic
Mm-hmm.
because their reputation is not the driver of their business, and their income is below the limits. I mean, you saw the numbers. We don't have we have one or two clients that might fall into the lower middle tiers. Matt might have an upper tier guy. Your Carlisle guy.
Well, yeah, but because Cubit's figured off of net
Right.
net profit, my car dealer, because it's figured off of net profit, actually falls into the lower tier because he doesn't clear a net profit of over 190,000.
Yeah, so he doesn't make a lot of money.
I mean, he does, but when you look at his tax return, you look at it and go, damn, how in the hell?
Net losses from qualified business activities combined with net gains from other activities go into the factor when you're figuring Cubic. If the combined Cubic is negative, then you don't get one.
Nope. And keep in mind, Cubit and your self-employment adjustments, those are all taken as either adjustments to income or added to your standard deduction for your business on your Schedule C.
Your form for this is $89.95. You'll never see it.
Nope.
Fusion already has figured out Cubic for you. It happens automatically. There's no box I have to check to trigger it.
Nope.
I don't have to worry about it.
The fact that you filled out a Schedule C, Schedule E, or Schedule F will automatically trigger Cubit if it qualifies.
And the biggest part is I have to make sure that my business has net income. All of my Schedule C's, E's, and F's have to be total up to be positive for me to even have a shot.
Yeah. Yeah.
If I have negative income, I don't get it. So let's take a quick break before we do Chapter 18.
Yep.
Sorry. No, it's not too bad against the building. But the earth holds a lot of heat, so
It's not bad in here at all, actually.
now it was colder earlier.
It would be better if I was able to turn on the lights.
So your cars look okay, yeah?
Can I have one?
No! Not tax season.
What is that? That's a one.
You have a few, that way you can hand them out to people. but this way you'll have something to put at your desk. One night you don't have to keep
Right.
coming and steal mine.
Just like smaller to you.
Because you'll notice on there it has all of our stuff: phone,
Right.
fax, email.
I've seen that.
I dropped it. My thumb seized up, so. But I go next week to be tested. Now my doctor looked at my sister's test results to get me submitted to her doctor so that I can be tested for the autoimmune disease that my sister has. Because I have all the symptoms, so.
We did my birthday party at my daughter's yesterday.
Can I ever get your?
I'm a walking
Yeah,
miracle.
right here.
That night, at the birthday party at my daughter's last night, I had the
Actually, I was
most
getting ready to
surgeries, most
throw that away.
scars, most,
I
you
threw
know,
out a bunch of
staples,
stuff
stitches
yesterday.
and
We
everything.
went
Out of
through and
the
cleaned out.
entire room
My
put
husband
together.
cleaned out his dresser, his table that he's got all his jeans and shorts and stuff on. And then we cleaned out the dining room closet and I found a box of crap stuff that I did. And I said, now I think we'll do this for your super code. Recipes, so. And then, oh, and then I put out my kitchen cabinet with all the glasses and stuff that I use. So. So that's actually Shane's recipe here.
I've had my lower stomach cut,
Here's that one. Here's that
chest
one.
cut
The
open.
Irish, yes. You want that one too?
Well, kind of. I had both my girls and my sisters.
Oh, and this is the.
And then I had 11 pounds of everything. They went back to the correct.
Mhm.
And so I had those four, I had my heart, one, and then they cut me some collarbone and collarbone from my collarbone. So I just crossed, looked like a big team. And then I've got the scars.
There's the cowboy beans. Yeah, Shane brought his book in last year. And we went through it and I picked up a few, but a lot of these are mine. And there's, I picked that one out online. And then these are mine. There's a lot of desserts in that one.
Yeah.
Mine was all in that I had all. I already had all that I knew. And endometriosis, so I was having 2 pills. Pretty much the time I started as a kid, 5th grade. I'm living with it. They could put them every yonder for nothing.
My sister-in-law's liable to freaking break down and have a fit. We both had identical surgeries. She, her surgery left her with a scar
Here, 'cause I can
like
put like 3 on a
this.
sheet.
All the way. We had
Off.
almost identical surgeries, honestly. She's got a big old scar like this running down the side of her neck,
I don't even.
and mine, you can't even see my scar. 'Cause
Well, this-
mine's like right here.
This one you can't hardly see. The surgeon that did that did a damn good job.
Yeah.
Then they did this one and it's bumped up and
That one's gonna be harder to.
this one's just like the one on the lower part of the stomach.
It's a-
It's been cut
those-
open 4
which one
times,
is
so
it?
it's gotten red. It's got this
Oh,
line.
I got those
It's
out of
just as
the,
hard, but if I can hit it, like if I hit it on a corner,
I do.
it'll stop
I don't
me.
either.
I like the
Oh,
other day, the ones, the scars on my left leg are the ones where my knee is, that hurt bad. I was cramping bad yesterday.
I forgot I had a scar on my
Yeah, 'cause you had knee surgery?
Had
I
knee
don't know if they're
replacement.
gonna do mine. I'd have to have both my knees done. But the main reason why is because I got hit by a truck. I got hit by some Suburban and walking to Walmart. But I don't know. I got hit by one-eyed black fella. He couldn't hear.
We got hit by a little old lady using
That
a
is
backup
really good.
camera.
Oh,
Yeah.
Ron's mom did that back in some trip.
Because,
And I yelled and shit.
These they call them for 100
years.
oh, okay, so this one, you just boil
I
your
think
chicken.
I got hit by a car. He said, what? I thought it was
You just boil your chicken and then you just mix everything together in a bowl. You mix it in a bowl and then you just put it onto tortillas and roll them and bake it. It's really simple. Yeah.
Time I got hit, time I got home, my bruise was that big. And he said, you got hit then. I said, well, I'll do it. He said, good. And that evening, the next day, you had to take me in because my thing was so excruciating. And I got
I have a weird tolerance for pain. I'm not, the availability of 6 contraceptives a day. I just want that muscle relaxer because it doesn't do nothing. Because my back, only when I'm doing stuff, if I'm not, if I do my normal day, I'm okay.
Well, that's her.
Sorry.
She goes over to her kid's house for the weekend. You know,
When
when
you
she
Yeah.
get yourself
Yeah.
good,
well,
well,
when she does that,
up
the
and
kids
down,
bust
turning,
out. The
twisting.
kids bust out the whip and the rags and whatnot, and they've got a little Hebrew slave over there for the weekend.
yeah, they, when we were over there, what was it, months ago? I mean,
well, my mother was so bad, she would rearrange our cabinets and our everything in the fridge, and it's like, Mom, come on now. Not everybody's.
Okay.
We'll go over for a weekend.
I used to
And
do
when
it
she
every
leaves,
day. Clean the fridge, clean the bathroom.
It's done in
when
the
she leaves, the kids will say, "Mom, can you come
So,
back in 2 weeks?" She'll be like,
I
"Yeah,
don't like
sure."
brown gravy
She
mints.
gets back, they won't
So I
clean for that
omit
2-week
the
period.
brown gravy mints, but with the
They
Italian
expect her to
and the
do it.
ranch, it's still
Well,
really.
my daughter has, my daughter
Yeah,
is
yeah.
so bougie.
I don't
She
like
has a
sodium in it, but I
Ready?
don't like the taste of it.
All right.
Lady Cruise
Chapter
Line.
18, we're going to talk about payments, penalties, installment agreement, innocent spouse, and injured spouse. It's a long chapter and book, but we can tighten this up a little bit.
We can fly.
So we're going to talk about what happens when you make a payment, either because you owe or because you want to do estimated taxes. Credit for prior year overpayment or credit for excess Social Security tax. I'm not going to cover because we've already covered that. Overpayment versus balance due. I'm not going to spend a lot of time with because either you owe or you don't.
You pay or you go wherever.
You're either getting a refund or you're not.
Well, there is a $20 swing in there where it's neither, but
Well, that's true. If you owe less than 10 or are getting less than 10, you don't
You
get
ain't
nothing.
getting it, yeah.
you don't owe if you owe $10 or less, and they're not going to send you if your refund is $10 or less. So there's a $20 swing in there, and basically they justify it as attributable to rounding.
Yes.
Have you ever seen that happen?
Yes.
I have a client, when I told him from Louisiana did his return, and he found he's getting less than $100 back from his boat, he was like, let me file. Because the IRS owed him, he said, I'll need it.
All right, so we're going to talk about Form 8888 just a little bit. Paying the amount owed, installment agreement. We will talk about injured spouse, innocent spouse. We will spend the majority of our time on because those are the two important ones about this entire chapter.
Yes. And real quick, the answer is no. If you have a $9 refund from the federal government coming this year, and next year you owe $100, will they take the $9 off the $100 that you owe for next year? The answer is no. I had a client ask that question. That's why I bring it up.
Also, the answer is no if you have a $9 refund and you decide to apply it to next year as a prepaid tax.
Yes.
Linda tried that one year for the state of Illinois. She tried. She was getting a $4 refund, so she just tried. What the heck? Didn't work. But hey, we now know. All right, we've already talked about this. The tax is pay as you go, so I'm not going to spend any time on that.
Oh, it hurts.
So we are in this section of our 1040, and this is where we're specifically hanging out at right now. Payments.
Yes.
And then we're also dealing with refund or amount you owe. We're in this area of our 1040. Payments not only include payments you made through withholding and also estimated tax payments or amounts supplied from a previous year refund. Several refundable credits and excess Social Security taxes withheld are all treated as cash payments.
Almost 6 last year.
Withholding generally comes from wages, retirement distributions, gambling winnings. Tax can also be withheld from unemployment and Social Security benefits, but you have to specifically request that. These are payments that are made by you from income that was due to you. Yeah, I never saw it. It went straight to the IRS, but that was a payment made by me. Estimated tax payments are payments you make directly to the IRS throughout the year to cover taxes that are not being collected through withholding, or something came up. I won $10,000 and nobody's going to withhold any taxes on it. I should probably make a quarterly payment for that quarter.
Or you hit a big lottery. Say you hit $1 million on Powerball, and the state went ahead and took taxes out. Before you start spending money, go and do a mock-up and see exactly how much tax you're going to owe, because you're going to get taxed on the million that you got. And just because they took out 20% or whatever
Doesn't mean it was enough.
doesn't mean it was enough to cover it. Run up a mock and see what you're going to owe for next year and include the amounts that you know you're going to have withheld. And then whatever that other balance is, send in an estimated tax payment. If it still shows at the end of everything you're going to owe $25,000, send in a $25,000 estimated tax payment.
What's the worst that could happen?
You get some of
You
it
get it back.
Just FYI, if you decide to run a practice return, last year they were not correct.
Yeah.
But at least it gave you some idea.
Yeah.
Estimated tax is a calculated total of the amount of tax liability you expect to accrue for the year. This is an estimate that we're doing before anything happened. So, as you go through the year, make sure that you're keeping on pace. Because if you're making more money and paying at the other rate, you might not pay enough. And then get hit with a underpayment penalty.
Yep.
Which is covered later in this chapter.
Well, it's just my couple that do the rentals. They sold their house. They wanted to know what percentage of that they needed to withhold for taxes.
Right.
So I was able to, do the 15% because it's a capital gain. Did 15% of what they sold the house for, and told them this is the number that you need to send in as an estimated tax payment. Because the thing is if they don't, and they owe $10,000, not only are they going to owe $10,000, but they're going to get hit more than likely with at least 1, possibly 2 quarters of underpayment penalties for underpaying their taxes.
So is there a form to send in with your tax bill?
There is a form 1040-ES, and it's broken down 4 times.
Yes, you can do that, or if, like my rental couple, you can just go online and make a payment to the IRS, and in the drop downs, it'll let you select what you're doing. So, in the drop down, you can put in estimated tax payment. And then you make that payment, and then you print off your receipt from IRS, and then bring it in when you do your taxes.
Yeah, you want to make sure you bring it in when you do your taxes so we can make sure that we log that you made an estimated payment.
Right.
Because that's the only receipt you're going to have. Otherwise, I don't know unless you tell me.
Yeah. If you don't bring the receipt in, so that I can put it on your 1040-ES.
I have no way of knowing that you made one.
Yeah. And on the 1040-ES, I have to know when you made it, how much you made it for, because it matters.
Yeah, the date matters. All right, so, and when we're doing estimated payments, let's not overlook the fact that it's also from self-employment and other things. So we're not just looking from the point of view of our income tax. We also need to be including our self-employment tax. That's why I was telling you when I was talking about my guy and trying to figure out his quarterlies, I was doing 30%. Because 15% of that alone was self-employment tax.
We advise to overpay.
We do. Because the
Rather
penalty
than
for
like-
overpaying is just getting a refund.
Right,
The penalty for underpaying is, well, you owe plus.
yeah.
Yeah, you have an underpayment penalty.
Yeah. And then, my guy also kept a running total. You know, he did a quarterly standing of where he was.
I only think we have 2 or 3 people that report it. Everybody else just,
Yeah, I have lots of people that should be.
Yeah,
And
most all of our Schedule C people are doing just at the end of the year. If I owe $5,000, I owe $5,000.
But they're also able to write one check for that full amount though too,
Yeah.
and it's nothing to them.
Yeah.
Us, they would just kick us in the teeth. but-
All right, so I'm filing a tax return this year, and I'm due a refund. I have 2 choices right now off the top of my head. I could either take the refund, or I can use it as basically a first quarter payment.
Ooh, take the money and run.
Yeah, most of the time. No, I've had clients that's like the guy I was just talking about. He did it. He just, if he had any refund, he just said, okay, yeah, just let them keep it as part of my first quarter payment.
Yep.
And that's fine.
I think I've seen that one.
That was the whole reason why I had to do that bank that tax return for Intrust Bank, is because the year before the guy rolled over his refund.
Hmm.
He didn't want to really mess with it, so he just rolled it over to next year. And then he died, so I had to file that tax return just so we could get it. That was the only thing I was doing it because he died early in the year. So
If he'd have died in July,
he might have triggered it. He might have done the activity that he was thinking was going to cause it.
Yep.
But he didn't. So that's the only reason why I had to file that tax return, because there was $3,000 sitting around.
the IRS will gladly keep it if you want them to, but
Yeah. All right. So we already talked about this, so I'm not worried about credit for Social Security tax.
Nope.
Because we covered it. So we're finishing the return. We figured out how much you owe. We figured out how much you made in payments. And we either have a overpayment, which is going on line 34, or a balance due that's going on 37. What we got to do next? Well, the overpayment on 34, I can have it refunded, which is basically what most people want. Some people choose to have it credited the next year. All I've got to basically do is just check a box.
Yep.
Knowing, though, that if I do that, it is there.
it's done. You can't change it.
I can't file paperwork later to get it. Or, if the IRS comes back and says, hey, you underreported something because you missed a W-2 or something like that, they don't take it out of this either. That number is locked for next year. So if you get a letter saying, oh, hey, yeah, you underreported because you didn't report a W-2 and you owe $500, they're not going to take it out over the rollover. You're going to have to cut a check for $500.
Yep. Now you will have an estimated payment for what your refund was for the previous
Right.
year. Or
It'll
what
stay the same.
what we said that your refund was for the previous year, but you're still going to have to make it right with the IRS. It's not like the IRS is going to go, oh, well, you underreported this, so, we're going to take back the refund that we issued to you
Nope.
in the form of a payment, and you owe this. If it says you owe $5,000, you owe $5,000, and that $3,000 that you rolled over for next year is still sitting there.
35A indicates how much of the overpayment is to be received as a refund. I don't have to say all of it.
No.
I can choose. If I'm getting a $2,000 refund, and say, okay, well, they can keep $1,000. I want $1,000. That's definitely doable.
Form 8888.
I don't need an 8888 for that.
No.
I just need to check the box and tell them how much I want.
Oh.
Now remember, overpayments are also subject to offset. You might not get it because you owe student loans, child support, other taxes that are collectible by the IRS.
Ran out on your hospital bill.
Yeah, so just because I said that I wanted it applied to next year's or first quarter only implies that that's what I want to do if I was to actually get my refund.
Yeah.
You will get a letter saying, oh yeah, hey, by the way, remember that refund of yours? Yeah, you're not getting it. And this is why. That letter does show up eventually. Most of the time our clients know, hey, I'm not getting my money, why? Wait a couple of days, you're going to get a letter. Honestly, I have no idea, and there's no real way for me to go look at that. And you don't want that to be a possibility. Because if you made it for just Joe Blow taxpayer, you can make it for any guy
Well,
to go do that, basically.
if a client calls and says they want to know what's going on with their refund, our first option is we refer them to their packet, and in the front of their packet is a form that says, "Where's my refund?" You can go online to the IRS, or you can download the app IRS to Go, and you can plug in your social, your filing status, and the amount of your refund, and it will tell you what's going on with your refund. Most of our clients are too damn lazy to do that, so
Yeah.
when they call up, we look everything up, we plug it in, and we tell them what IRS, where's my refund at, is telling us is going on.
Yeah, you get one of three basic results. It's either in process, or it's been approved, it's in this stage, you're expecting it on that date, or we're sorry, your refund has been recaptured to pay off other.
And it never tells you what it's been recaptured
that
for. If it's
obligation
recaptured,
is.
it's just going to say it's been recaptured for a federally collectible debt. Period. That's when we tell our clients it looks like it's been recaptured. You should receive a letter within 30 days.
Although there is typically a phone number on there that you could also call.
Yes.
The client, that is.
Yes.
The client could call and maybe get an answer a little faster. But the answer's in the mail.
We cannot call for them.
No.
No, they will not talk to us, even if you're the one who prepared their taxes and your name and your P10 is at the bottom of their tax return. The IRS will not discuss with you that client's tax return.
Because it's no longer a tax issue. Not at that point.
Right.
Alright, so I got a refund. There's some choices I can make. I can have it mailed to me. That is the absolute last choice that you want to make, and it's getting worse.
You actually can't anymore. Nope. IRS discontinued paper checks.
They came back and modified that.
Yeah, they did.
Did they?
I just
Yeah.
got one.
They
Yeah.
came back. Well, that's for future,
IRS.
not for an IRS, not state.
Oh, that's right.
Yeah.
They came back and modified that because they actually did realize that some people are just unbankable.
Okay.
But it's going to be bare minimum 6 weeks.
Oh yeah. Okay.
And they were still giving you an opportunity, apparently, to go on and become banked. So if you could get a place where you could put it, that you can have a direct deposit, they were still giving you an out, apparently, somehow, to enter in that information to speed up your refund.
Okay.
But right now, the last choice you want to make is the IRS sending you a check.
Yes.
Which is the other reason why the check was never going to go completely away, because if you put in wrong bank account information and the bank sends it back, that's what you're going to get is a check.
Yeah.
If the IRS sends the money to the bank says, nope, this is wrong, we don't know who the hell that is, and sends it back to the IRS is going to cut a check, and it's going to be at least 12 weeks. But direct deposit is an option. We're putting in a bank routing number, a type of account, and the bank account number. Double, triple, quadruple check, because if we put it in wrong, we're left holding the bag.
Put the number in. Have your client double check it. Has your
initial it.
client initial on the paperwork where they have put down the numbers, that they
However,
have double checked it?
however, if you're doing a remote, they are not able to see that information.
True.
Yeah. But we want to make sure that they've initialed it, whatever we can, so that if it does come back that it's wrong and it went to the wrong account and they can't get it back, it's not our fault.
Right.
We did our steps, and the fact is you gave us the wrong information. Sorry.
Yeah, because I remember one year we had one guy that initialed it, but he left out a 0.
Yep.
Yep.
Yeah, he left out a leading 0, and that made all the difference. But it wasn't our fault.
We put.
He did eventually get it, but
I can also allocate the different accounts through 8880.
Hey,
8888. Allocation of refund, I can also use this point to say that, well, first, I can say that I want direct deposits into these 3 accounts, up to 3 accounts.
mhm.
I can say that I want some money sent to me as a check. Again, not recommended. I can say that I want some money to be used to purchase a U.S. savings bond.
Mhm.
Never done that, but it's an option. Now, when we're talking about recaptures, the IRS works in a bottom up. So first they start here until that runs out, and then they go here, here, and then there.
On the bond, you have to register that with your taxes on the next year, wouldn't you?
No, because it's not a taxable event until I cash it. So no, I don't. Unless I cash it. Which would be stupid. You might as well just take the refund.
Yeah.
Don't use an 8888 if you're filing an injured spouse or doing a 1040X amended or attempting to deposit a refund into the account of another person not listed on the tax return. I can't put Joe Bookie on there as my number 1 pay.
Change his last name from Bookie.
Well, but you get the point. I was doing it for effect.
I can't have my refund put into Suzanne's account unless
No,
she's
they
on my
won't even-
return.
usually the bank won't even take it.
Yeah.
We had
And
one
that
guy
person's
do
name's
that,
not
and
on
it took a minute, but they did it.
Yeah, and it gets to be, it does become a little bit of a problem with surviving spouses occasionally.
The fellas that did it was a brother-in-law or something, didn't even speak English. The client did not speak English at all, but the brother-in-law did. And so we were able to do it, and it went through. It went to the brother-in-law, and the brother-in-law gave it to the other guy.
Shouldn't have unless he was on the account somehow.
They lived in the same address, I think, is what helped it.
No, that might have helped, but still. Your name's got to be on that account in one way, shape, or form. All right, so and like I said, you can't do this for injured spouse, amended returns, or that's here. I could put it into regular checking or savings accounts. I could put it into IRAs or health savings accounts, or Archer medical savings accounts, or even Coverdell's, as long as I have direct deposit information for it. Which, if you're doing some of those last ones, just call your broker. You'll get it. He'll get it to you.
Mm-hmm.
All right. So I'm not going to go into a lot of this detail, and I'm not going to go into a lot of this detail. Some financial institutions will not allow a joint refund to be deposited into an individual account. This is true. That's why I tell my clients that have a deceased spouse, don't close that joint account just yet.
No.
You might want to just draw it down to $5 if you're concerned about something, but don't close it just yet. Wait until you at least get that final tax return done. Because if it comes back as joint, especially the year that you might have filed for them when they were still alive, because that one's going to come back as,
Oh yeah.
even though they might have died.
Your spouse passes away February 1st. So you haven't done your return for the previous year.
Mm-hmm.
So when you come in to do your return for the previous year, your spouse was still alive. So that's a married filing joint return.
Yep.
If you've closed the account,
You might
I
not get your
remember you
refund.
had one.
yeah, it might reject back.
It might reject back, and then the IRS will cut a check. The check will also say,
Your spouse's name on it because it'll
So-
be for them and you won't be able to cash it.
then you'll show up at your bank with the same problem for the reason why they rejected it in the first place.
Yes.
So if your only way around that is you show up with a death certificate, then you might get around it.
He had one last
It's not the first
year. I
time.
remember.
We have those at least once a year.
Mm-hmm.
Don't close that account just yet.
No,
Make
please.
sure that you're done before you close that account. Keep it at the bare minimum. Keep it at the bare minimum for the next 5 years. I don't care. Just don't close it immediately. Please don't. You'll be sorry.
If you have a spouse that passes away, leave that joint account alone until the first year you file as single.
Yeah.
Period. You're either going to file when you file single or file qualified surviving spouse. Once you file the return for that year and you get that refund, close the joint account. Take
Right.
his name or her name off of that account.
Right.
At that point.
At that point.
But as long as there's a possibility that you are going to get a check, direct deposit, or anything else in the name of your spouse, leave the account joint and leave it open.
Yeah.
IRS isn't going to worry that your dead spouse is on an account 5 years after his death.
No, they already know that. All right. So if the IRS, if the bank rejects a deposit, it goes back to the IRS. The IRS will then cut a check. It'll take their merry little time on doing it. Meanwhile, on Where's My Refund, we kind of do keep track of that a little bit. They are somewhat okay about, okay, we got it back, the check will be cut. But it's a small window when you're sitting there. And it's not very comforting when you know that it was sent and rejected.
Yeah.
I'm actually happy when it was sent and rejected because at least I know it wasn't put into the wrong account.
Right. Right. So when you look at your at it and it says, well, it should have been deposited on this date, then I can send my client to the bank. The IRS says they deposited on March 3rd. So they look. Oh no, that one we sent it back to the IRS. IRS isn't going to update Where's My Refund until they turn around and mail the check out.
Right.
Or you open it to look and see what it's at.
Yeah, they'll update when they mail the check.
Yeah, when they
We
mail the check.
on,
Right. So bank sends it back on March 3rd. If they don't mail the check out until May 1st, they're not going to update Where's My Refund until March 1st. And then it's going to say, check's been mailed out. If you do not have this check within 7 days, please contact us.
all right, so past due obligations are handled by the Treasury Department's Bureau of Fiscal Services. That's the phone number that will be on Where's My Refund if
Yeah.
it's been recaptured. You're not calling the IRS, you're calling the Treasury Department. Well, actually, if you call the IRS, you are calling the Treasury Department. You're just calling a different branch.
Yes.
Already talked about that. All right. So if you owe, I must pay the balance due owed by the due date of the return to avoid any late penalties and interest. Interest will be charged until the balance is paid in full. Payment can be made electronically or mailed. If you mail your payment, make sure it's postmarked by April 15th.
And includes the voucher. Please
Includes
include
the
the
voucher
voucher.
and your check for at least as much as you can afford, if not the entire amount. If
Yes.
you can't pay the entire amount, send as much as you possibly can.
If you can pay the entire amount within 6 months of April 15th, you do not need to get a payment plan.
Right.
If it's going to take you longer than 6 months to pay that entire amount, send what you can, call them, and get a payment plan in place before the 15th, please.
Yes.
If they add on like you start here and you have another prior year and add on, do they change that amount? Or do they stick to what you initially started?
They don't like doing that. They would actually prefer you not get in that situation.
Well, true.
They would prefer that you keep track of it and stop this because. But the answer to your question is they just add on to it.
So you said
I have
you
clients that just desperately need to be making quarterly payments, and they refuse to. And I don't understand why, but that's what they do.
Well, you could
Well,
say-
they just add it on to my payment program. It's like,
but
you
could
realize
say
you
all
added
the
on to your
extra
payment program for
interest.
every year I've done your taxes. And I've been doing your taxes since before I worked here.
Oh, heaven's sakes.
They just keep adding on to it. The IRS is actually garnishing their Social Security
Good Lord.
and making them pay tax on it so they can capture that too.
Too much.
Well,
Too much interest.
well, they
But-
run it on themselves.
But at that point, if as long as it's being added to the payment plan, that's the only thing that's getting added to what they owe is
20
interest.
years of daily compounding?
Yeah, but
No thanks.
they're making monthly payments.
It's like a credit card. You're never going to get it out.
All right, so if you're paying online at the IRS website, there are also some other links to some approved payment processors. There will be a fee for that service, a convenience fee. The IRS is not going to pay Visa their 3%. You are.
The only way you get out of not paying a fee is if you do a direct draft from your bank
Or send a check.
or send a check.
Which are basically obsolete.
If you have somebody coming in your office right now, I don't know if you girls are going to be there. Matt, I know you already know this. And they say, hey, I sent in an estimated tax payment, and the IRS has not cashed it yet. Do not let them issue a new check and cancel the one.
Yes, no.
Don't do that. It just might be taking a long time for them to process it, like right now.
Just please
Nobody's home.
subtract the amount from your running total.
I just told them,
And leave
leave it, just send in your June or your January payment. They'll catch up.
Yes.
And we don't see very many of
No,
the-
I know, but this was not even a client.
Oh.
There are also some. I want to say. I want to make sure I get this get my statement right. And please double check this because this information can change. There are some places where you could go to pay in person. Like for instance,
Walmart, I
well, maybe Walmart, but
was
I
it
know
Dollar General or
Family
Dollar
Dollar.
Tree?
think.
Family
Is it
Dollar.
Family Dollar?
It was because I looked it up one year because the one in Park City by my house would actually take, but you'll pay the convenience fee. But yeah, you can pay in person there. Always look that up. It can change from year to year, but there are places where you can make in-person payments. And the IRS office, surprisingly, is not one of those places.
No. Well, actually, you can.
If
The
you set an
tax-
appointment.
The Taxpayer Assistance Center, you can make a payment there if you call in advance and get an appointment. They will accept the payment.
Yes.
But
You just
Good
can't
luck
drop
getting
in.
them to answer.
they will not set an appointment if the only reason you're setting an appointment is to give
Make
them
the
a payment.
Yeah.
They will tell you to go online to irs.gov and make your payment directly to them.
Right.
Don't you have to do the ID account now for that?
No.
too?
No.
Oh.
Not for payments.
Not for payments. Now, if you owe an amount that's too large for you to make a payment or pay off in 6 months and you need a payment plan, then yes, you'll have to do an ID.me account to request a payment plan
Uh-huh.
from the IRS website.
Yeah.
But if you're just going on there to make a payment, you can go on there and make a payment all day long without the ID.me
Hell, you can pay
account.
for other people if you want.
Yeah, they'll take money without you having to verify who you are.
Yeah.
They're not worried about that.
And
The
you
hell
can
was
use their
that?
apps too. Alright, so if I'm paying my taxes, the form is 1040V if I'm sending it in. Don't confuse the 1040V with the 1040ES.
No.
1040V voucher, that's for what I owe on April 15th. 1040ES are my estimated payments. And they look very similar. There are some differences, but they look similar. All right, so when you do that, make sure that you write it out to the United States Treasury. Don't write it out to the IRS.
Although they'll
That won't
probably
stop them.
cash it.
That won't stop them.
Yeah.
When you do that, make sure that the taxpayer's name, address, and social security number and a date, time, telephone are all on that check somewhere. Most of that's already showing up. The rest of it, you just put down in the memo.
Yeah.
So the top is the 1040V, the bottom is the 1040ES, and it happens to be for fourth quarter. Because we can see the 4 on it. We also have the due date. So we know our fourth quarter for that year is, or for this year, is due January 15th of 2026.
And the estimated amount will be in the box right below it.
If you generate it that way.
Yeah.
And it could also be blank. You could also print these out directly blank from the IRS.
Yep.
You can go to the IRS website, put in 1040ES, it'll take you to a PDF where you can print this out.
Same thing with the state of Kansas.
Yeah, state of Kansas, same thing. If I need a 1040V because, I thought I was going to pay online, but I decided to save myself 3% and cut them a check, or go get a cashier's check, don't forget that's an option.
Yep.
You can go online and ask for a 1040V. When you do that, though, make sure you're doing it for the right year. Not that it'll really stop it in the long run, it just grease the wheels.
And if you're a client of ours and you owe, you will leave this office with a 1040V. If you lose it, call us. We will reprint it for you free of charge.
Yeah, because our 1040V will already be all filled out for you.
Yes. You'll basically click
Our
the bottom.
1040ESs will be filled out except for maybe this, which this is an election. We can have it filled out, we can leave it blank.
Right.
And
And if
I don't remember how to find it.
Yeah.
go
This
to the
one
search,
is-
go to the search box
this
on the
one,
left and put in
You know what I need on
1040ES.
their file, in
Huh?
their file.
If you did estimated tax payments when you open your return for 24, just go to customer documents off to the side, click on the federal return. It should be right there.
Yeah. If you printed a 1040ES the prior year,
We don't.
it'll automatically pull up.
Yeah.
Because it'll be a document the next year that you're going to have to verify the amounts on.
Yep.
Right.
Yep.
Right.
Installment agreement. If you owe and cannot pay by the filing deadline, you can apply for an installment agreement. However, information that Matt gave you already is correct. If you can pay it off by, actually it was kind of the end of the year. He said 6 months. Well, I heard it's by the end of the year. I don't care at this point.
Now, IRS direction was within 6 months. You do not need an installment agreement
Within 6 months
of the due date.
of the due date, so 6 months of April 15th would still get you to October.
Right. So if you can pay it off before the deadline for
Extensions.
extensions, you don't need to do it.
Yeah.
You don't need to do an installment agreement. The only reason that I counsel installment agreements for clients is because if you do it, if you owe enough, and you're only going to, if you owe $1,500, and you're only going to be able to pay $100 a month, that's 15 months. The only reason I counsel the installment agreement is because once you file that installment agreement, if you do it before April 15th, you eliminate the fee for not paying on time.
Because you made arrangements.
Because you've made arrangements, and as long as you're making your payments, you are considered in good standing with the IRS. Even if you owe them money, you're still considered in good standing because you have a payment arrangement.
Right.
They still charge interest.
Yes.
They still charge interest,
Compounds daily.
All right.
but
It's not very much.
It's not very much. We'll get to those numbers.
yeah, like 1/9 of a cent.
Yeah, so this allows
A
you
day.
to make monthly payments into the amount owed plus interest and penalties is paid. even if you cannot pay what is owed, file your tax return.
Yes.
Even if you can't, even if you send in $0, file your tax return, because the penalty for failure to file on time is much more substantial than the late payment penalties. Chances are the IRS already knows you owe, so just send it in.
When I was 19, I filed my very first tax return. I owed $33. Didn't have the money to pay it. My dad said, just send it in. If you can't send a payment in, just send it in. So I sent it in. Didn't file another tax return for 2 years. Got married, filed a tax return. I was getting a refund. Woohoo! Got a letter from the IRS about a month after we filed our tax return. Said, well, you know, you owed $33 back in this date, and we went ahead and took out for that, so your refund's $100 less.
Geez, dang.
To request an installment agreement, fill out Form 9465. We could do that here. We could
Yes.
send it in with your tax return.
Yes.
Or it could be sent out separately. It could be mailed. You don't have to do it at the time of your tax return.
If you fill one of these out, ask your client how much they can pay. Put that number in on the appropriate slot. Save it, and then go back and view the return and look. You won't have the information on the information screen, but if you go in and you look at the view the return after you've filled out the installment agreement, it will tell you what the minimum amount is. If you don't at least meet the minimum amount that the system tells you you have to send in with this agreement, it won't let you send it in.
Right.
So if they say that they can only do 50 and you pull it up and it shows the minimum is $65, then you can tell your client, look, in order to do this with this return, you have to do at least $65 a month. Normally they'll go, okay, we'll figure it out. And then you put it in and send it in, and at that point, then it's between them and the IRS.
Right. So let's hear. Matt just killed that bullet. Because interest and penalties are charged until the return balance is paid in full, you should pay as much as you can with the return, and make the monthly payment as large as possible.
Yeah.
Now you are being charged an interest and late payment penalties. You want to make sure you get out from under this as fast as you possibly can. And by the way, in the process of doing this, if next year you're due a refund, guess what?
It's automatically recaptured.
It'll automatically be recaptured. I had a client who she owed $15,000 at one point. She entered into an installment agreement with the IRS. 2 years ago, she came to me. She says, I got a refund. Where did this come from? Congratulations, you're square. You're paid off.
Yep.
She was shocked. She wasn't expecting that, because she wasn't, in her mind, she wasn't including all the years of tax refunds that she had. She still thought she had like 5 years to go, because all she was basing it on was
Her monthly payment.
her monthly payments. But her refunds were helping knock down that number faster.
Yep.
So she was shocked. As soon as I saw it, I knew what this was. You're square. You no longer owe the IRS. Stop making your payment. If she was, she was set up on direct deposit, so the IRS just stopped taking it.
Right, direct draft.
Yeah. Sorry, direct draft. So here's our 9465. We're proposing to the IRS what we can pay. They can accept it, or they can say no. And just because you follow Matt's instructions and say, well, the IRS, at least according to this, says 65, the IRS can still get it and say, no.
Yeah. And if they don't accept it, they will send you a letter with a new proposed number.
Mm-hmm.
Do not ignore the letter. If the new proposed number is not something you can do, at that point, my suggestion is to call the number on the letter. There
Right.
will be a number on the letter.
Uh-huh.
Call the number on the letter and talk directly with somebody who can get that handled immediately.
Right.
I mean, it's not like
they don't have proof of what your income was for the year.
Yeah, they figure that's the whole thing. They know how much you make.
Yeah.
So, assuming that nothing else changed, now that might be the reason why I need to make the call. You know, hey, you're thinking I still have $100,000 a year job. I got 10.
Yeah.
I don't make $100,000. I'm going to make 25 this year. So you're requesting me saying $1,000 a month. Hey, that's not doable. Now you got something to go back at them with. So yeah, okay. Now they'll accept a new number.
Do they take your home finances into account or just your wages?
It should be just your wages. They should not have anything to do with your non-liquid
Yeah, they're-
assets.
Well, I didn't know if that benefited you by
They're
submitting that information.
they're not gonna. What they're gonna do is they're gonna look and see what your adjusted what your total income was, your adjusted gross income. So it's $100,000. That's what they're gonna base the payment off of. Now, like Shane said, if you retired from Boeing and you're not making that 100,000 anymore, you're only making 45. All they're gonna be able to do is look up and see what you're currently making because they'll get that information from Social Security. Okay, so you're making 45. They're not worried about you making that $1,500 a month house payment, that $600 a month car payment, or anything else. You're making 45,000 a year. That's what they're going to base their repayment number off of. Because at the end of the day, they don't care what you're paying as long as they get paid.
Yeah. So you're going to stop buying caviar and you're going to start buying the Great Value brand beans and
You're going to buy great value capers instead of that freaking caviar.
Hell no. I stockpile money they don't know about.
That $130,000 top of the line BMW, they will expect you to sell and get the 3-year-old Ford Focus and send them
I am never
the
gonna sell
difference
my car.
in the proceeds.
no.
My car's ugly and all they like, but
Well,
you know what?
the
I
unfortunate
busted my ass for my
They don't.
car.
the unfortunate thing is if they levy your car, you don't have a choice.
No, I know.
So in this area right here, we want to point out is drafting information. The IRS gives you a bit of a break if you sign up for direct draft, as opposed to promising a check every month.
Yes. They reward you for making it easy on them.
Right. So if the amount you owe isn't more than $50,000, you don't need to file a 9465. You request it online, also for a reduced fee. Just to file this form with the IRS costs money to the client.
$35 application fee.
That's not us charging you. That's the IRS charging you.
And that's why I usually tell my clients if they're going to enter into an installment agreement, if they have it directly drafted out of their accounts, IRS will waive that application fee. They will not charge it.
Yeah. And a request for an installment agreement cannot be turned down if the tax owed is not more than $10,000 and all the following apply during the last 5 tax years you are current.
Yep.
You've agreed to pay the full amount owed within 3 years. IRS determines you cannot pay the tax owed in full when it is due, and you gave the IRS all the information they're requesting. It's an undue burden for me because they're not going to make me sell my house. I might have the money, but I got to liquefy things. Some things I can liquefy, some things not so much. Like I said, it costs to file this form. The IRS charges these amounts for those situations.
Mm-hmm.
You set up for direct debit, it's only $22 using the online payment application. If you don't use the online payment application, you have to pay $107 even for direct debit. If you wanted to say that you're going to check money order, it's $178 or $69. You know, it depends. There are some exceptions to that rule, but generally that's what you're looking at. There is a reduced fee if you can prove that you pull of $43.
Or 0 if you're doing direct draft.
Yeah. But to do that, you need to file Form 13844. to prove that you're poor. And these are, what's the word I'm looking for? Poverty line. That's the poverty line tag.
Yep.
So if your household and those monies are below that amount, then,
I'm below that number one, like 3 times.
well, then you're poor.
And you poke.
Oh,
By entering the installment agreement, the IRS will let you pay the amount in monthly payments. In turn, you agree to do your monthly payments and meet all future tax obligations. By that, they basically mean you keep current on your taxes. You file on time. If you do not file on time and do not file an extension, the IRS says, "Hey, remember that installment agreement? We want it all right now."
It's null and void. And they will not let you reapply
Right.
till they have that payment in full.
So therefore, make sure you file your taxes while you're in an installment agreement.
Like your clients do.
Yeah, they always file on time. It might be the last day of the tax year, but they always file on time.
Just add it to my running total. So-
All right.
So do you file a new 9465 with them every year?
Nope.
They just call and
She just calls up.
calls up and has them at it?
Yep.
I was gonna say, because there's a spot on there, if they know how much they owe when they go in, you can put that number in on the 9465 plus what they owe now,
To come up with a new number. But
and it'll come up with a new payment number. And
No, she just calls up because it's all under direct draft. So basically, she just wants them to. She just wants to get over with.
she just wants them to add it to it.
Yep.
That way when they die, they stick it to the government.
That way, when they die, the government gets the house. No, they know this.
yeah.
Injured spouse. This is an important one. Taxpayers considered an injured spouse if on a joint return is filed part of his or her share of an overpayment refund is expected to be applied to the spouse's past due tax debt such as a federal, state income tax, state unemployment compensation debt, child or spousal support, or a federal non-debt tax such as a student loan. This one I never kind of understood in one regard. If I'm married to this person, don't I want to get rid of their debt too? As fast as possible?
You would think.
You would think.
Child support would
I
be
don't
the biggest
care.
thing for me.
But I'm still married to this person.
Exactly.
It's still an anchor around both of our necks.
Right. I mean, if you think about it, if we're filing a tax return and I was a heel and I've got 2 kids that I owe back child support for, we're both working.
I know, but then I'm one of those big B words that says, your debt, I didn't shit them, you did.
Right, whereas me, I let our stuff get taken from Kelly's kids.
Right.
So, I mean, because I wanted it.
Well, maybe it's because the significant other is worth fighting for. My significant other, I'd like to talk to you.
See, that's always been my thing. Is like, and no judgment really. Kinda, I say this, but then, you know, I'm kind of wondering. Well, are you really planning on staying with this person for a long time? If you're letting them, you know, if you're doing injured spouse. Now I get it. You got a couple of kids of your own. You really kind of need the money. I understand that.
Yeah.
But in the long term, especially if you don't have any kids, really?
Like my cousin Rose, she got divorced. Even though she got divorced, she had to pay her ex-husband's doctor bills. $56,000 just because they were married.
But that's a different case.
I know, but still, you know, I'm just saying, it's, you know, the same thing as, she couldn't have a child, but, you know, that's neither here nor there, but she didn't have a child support thing, but still, you know, doing an injured spouse, she didn't even get the opportunity to do it.
Not all debts are subject to a tax refund offset, but our clients surprisingly kind of have a pretty good clue. Especially if they come in and say, yeah, we're married, but we want to file separately. Well, already I'm thinking, this
Why?
is the reason why.
Our
Yeah.
number one question is why.
Yeah. Our
Us
number
too.
one question is why.
Us too.
All right, so if they say, well, he owes child support, and I think she's a big B, and so I don't want to put my money into it. Okay, I get it. Or especially, well, we have our own kids. We need some money.
Well, then it's circumstantial too, because it's like if he's driving ass and he just doesn't want to get up and go to work and keep it paid up, I'm not helping.
Yeah, well, but again,
Yeah,
it's not a solid marriage to begin with.
right.
Moving on. 8379 injured spouse allocation is the form we can use. Instead of doing married filing separately, let's take advantage of all the tax breaks that you're actually qualified for if you didn't do married filing separately and get a bigger refund for both of you so we can work on this. And then we can file this allocation so that the person that is not affected because they don't owe the debt gets their share of the refund. This can be filed with the tax return. This can be filed later. If they all of a sudden it happened this year.
Say they didn't know, they filed a joint tax return, and all of a sudden that $8,000 tax return gets recaptured because he
As student debt.
has the student debt. They can come back in and file the 8379 and mail it in and say, no, out of that $8,000, 4,800 of it is mine. I want my refund. They'll issue the refund to the injured spouse and apply what should have gone to the other spouse against what he owes.
So we can file it after the fact as a standalone. And once we start this, we have to continue this as long as that they want to get their share of the refund.
Mm-hmm.
So just because I filed one last year doesn't automatically mean that an injured spouse form will be filed this year. We have to file a new one. On this 8379 allocation, let's talk about some of these rules. To be due the 8375, first and foremost, you have to be married filing jointly. The injured spouse must not be required to pay the past due amount. Must have reported income such as wages, salary, self-employment, or income on the joint return. If she's on the return and she had no income, there's no injury.
Nope.
I'm sorry. Even if they have children together,
Even if they don't have children together.
yeah.
If he marries her and she's got 3 kids and she has no income,
Yep.
the refund credits that they will get for her kids are based solely off of his income
Right.
and are completely recapturable.
Yep.
There's nothing anybody can do about it.
Yep.
And to make it a little easier, they break it up. So if my income is 20% and Kelly's is 80%, they're going to take 80% of it, of the refund for his kids, and give me the other 20%, regardless of how many kids we buy.
Yeah.
Yeah.
When I add this form, basically the computer kind of does all the math for me.
Yep.
I can go in behind it and suggest different totals to the IRS, and they may or may not accept them based on other information.
That's why we designate tax lightning and spouse.
Yeah. You could do that.
Well,
A-
we do
a-
that throughout the return.
Well,
don't we, on certain forms.
We do, but I could go
something
back
like-
on the I could go back on the injured spouse and say, okay, instead of she should actually, I'm proposing that she should get all the child tax credit because
They're her kids.
they're her kids.
Yeah.
They're not theirs together. They're
That's-
just
Is
hers.
that one of the crickets that we do?
No, typically what will happen is when a couple comes in and they say, look, we want to file, we're married, but we want to file married filing separate. Why? He owes back child support.
And that's what we
Okay,
do for
fine.
the other.
He owes back child support. Do you have any dependents on the return? Yes. She's got 3 kids. Okay, are they his kids and your kids, or just her kids?
Right.
No, they're just her kids. So when we do that return, we're going to list her as the primary taxpayer, him as the spouse.
So it separates easier.
It separates easier, but when we put the dependents on the return, we're putting the dependents on the return as the taxpayer's son, the taxpayer's daughter. That way, when we turn around and we say, look, she made 30, he made 60, instead of giving her a third of the total refund, we're saying that her earned income credits for the children, her additional child tax credits should be figured off of her $30,000 because those are her kids. And irregardless of him, if she was filing had a household with 3 kids, she would be entitled to those credits. The IRS would probably go,
All right,
Agreed.
we'll accept your argument.
we'll accept your argument. So this is what she would have got at a household for her credits here and here. That's what we'll give her. Subtract that from what it says they're getting jointly, and that amount goes on him, and she gets the refund that she gets.
Right. But you have to do that because it's got to automatically do based on income. You have
Yep.
to go back and say, no, these are her kids and her kids alone. He shouldn't get any credit for them. You know, that's why stepchildren is an option on the drop down for that type of thing.
Yeah, because if you already got into it, and they're her kids and not his, and he's listed as the primary taxpayer, you can list those kids as stepkids. That automatically tells the IRS these are not his biological children. He married into it. And if you turn around and you make the same argument because she's listed as the spouse, these are her kids. If she had filed her own return, she would get these credits for these children
In this amount.
in this amount. This is what we say she should get. We've got an argument.
All right, so part 2 is information about the joint taxpayer. Part 3 is allocating between the taxpayer and the spouse the items on the federal tax return, adjustments to income, itemized deductions, credits, taxes, federal income taxes withheld, payments that might have been made, like estimated payments or something like that. If a deduction or credit would not be allowed if you filed a separate return, use the deduction or credit shown on the joint return and allocate that amount between you and your spouse, which is what we were talking about. So the program will automatically put in a core number. I can choose to go back and propose a different number. The IRS then can look at that and decide whether or not they agree with my assessment. They can go back to the core numbers, and there's not a thing I can do about it.
Yep.
I'm just making a proposal. These are her kids. She should have got the entire credit. They're not joint kids.
Yep.
So the IRS will go ahead and figure any refund due to the injured spouse. It does take longer. File an injured spouse return, 6 to 8 weeks ain't gonna cut it.
Yeah, that 21 business days that we tell all of our clients they should have a refund in typically. If you've got that injured spouse,
Yeah, that's out the window.
it's out the window.
It's whenever they get around.
Yeah, it's
to it.
whenever
That's
we get
what
around
we
to it.
sometimes
Minimum-
have to say, is when the IRS decides.
With an injured spouse, I usually tell all of my clients minimum 12 weeks.
I agree. And make sure that we use the word minimum. They'll never hear it. They'll say,
No.
"You said 12 weeks." No, I
We
just
We
say
have people
minimum.
that call in because they don't remember to do the holiday
yeah,
days.
yeah. And those are
Or
business
weekends
days.
Yeah.
Yes, it's
So,
21 business days.
Business days. They don't hear business.
February
days.
sucks because you have
Two holidays.
have a
Martin
president.
Luther King, President's Day.
We had a client this year that kept looking on the IRS.gov website,
Mm-hmm.
and it kept saying in process, in process, in process, in process.
Yeah.
No, hold on. This was August.
Yeah.
Okay? She actually got her check back in May, and the IRS was still showing in progress.
Oh wow.
And the only reason I figured out was because when I went and looked at our system, it showed it was deposited in May. And I said, you need to check your card. Because she had a deep blue, and sure enough, it was on that card.
I got my degree.
Yay! All right. So that's the injured spouse. There's another form not to confuse it with. Is called innocent spouse. 8857. This is a request for relief from joint liability of taxes, interest, and penalties on a joint return due to incorrect items reported by the other spouse. This is where I insert my Golden Girls story. You ever watch Golden Girls? Remember the episode where Stan and Dorothy were audited by the IRS? Okay, it's been a while There was an episode where Stan and Dorothy were audited by the IRS. Well, first Dorothy says, "Well, we're divorced. That's your problem." He says, "No, this is from a return when we were still married. It's our problem." Turns out that Stan was incorrectly expensing the rent of a personal Corvette on his business. And at the end of the audit, it is determined that they both owed $5,000. No, it wouldn't have been a great story had they not gone ahead and said, it turned out that Stan hawked the Corvette and paid off Dorothy's share, which he should have anyway. But my argument is that Dorothy qualified for innocent spouse. Stan deducted the expenses for renting the personal Corvette rental spot on his personal Schedule C business return. Dorothy was not involved in that business one bit. She had no idea, nor any reason to know what was going on the business return because she was not involved in it. She should not have had to owe $5,000 because she's an innocent spouse. What Stan did, she had no knowledge of, nor should she have been expected to have knowledge of. She should have filed the 8857 and left Stan holding the bag for the entire amount.
Yep.
And if I would have done that, I would have won.
Yep.
Because she met all the requirements. She didn't know. She had no business knowing because it wasn't anything of her doing. And she was not involved in the business.
Now, if she'd have been keeping the books
Yeah.
for Stan, that would have negated the whole thing. But because she was at home taking care of the kids while Stan was running the business, and at tax time, Stan comes in and says, "Here, sign this." She signs the tax return and they mail it in. She's not going over the tax return. She's signing the tax return because they can't file it without her signature.
Right.
And,
And she's
that's what
trusting-
the situation was, wasn't it?
Yeah.
Yeah, he just shoved it in front of her and said, "Here, sign this so we can mail it."
And she's trusting Stan to make sure that the tax return is filled out properly.
Because even if she read the tax return correctly, she would have probably never picked up on the rental.
Right. She would have just seen a spot on the Schedule C for a rental.
She wouldn't know what it was for. She's not involved in the business.
No. Because there's no material participation,
She's innocent.
she's innocent.
So I fill out this form for her, I win. I've never filled out this form, but I'm ready.
Yeah. I've filled out injured spouse, but not innocent.
Yeah, we've got
A lot.
I think I've done one innocent spouse.
I know, we've talked about it enough that we know
I think I've done one.
we know how to apply and win.
Yeah.
And the big question is always going to come back to is, does the other person have any business knowing what's going on?
Did you materially participate in the business at all? Because that's going to be the threshold that the IRS is going to hold to. Did you materially participate in the business? If you did, you should have known.
Yeah.
Even if you were a peon on the floor sweeping up, if you materially participated, you should have known as his spouse what was going on.
Yeah. If Dorothy had been doing Stan's books and Stan had just been giving her expenses and she didn't question any of it, she would have still been at fault because she should have asked, "What is this for?"
Yes.
All right, so like I said, even though that they're currently divorced, they can go back to times that they were married, just like in my example.
Yep.
Thank you, Golden Girls, for that one. Makes this unit so much easier to teach.
Yes.
And I have to file an 8857 for each year it applies. So if Stan had done it on multiple years, I would have to go back and file multiple 8857s.
You'd have to find out how many years Stan listed that rental on for that Corvette.
Right.
If he listed rental fees for that Corvette over four tax returns, you have to file one of those for each of the 4 tax returns.
Yeah, because each year is its own separate picture.
But it was for entertainment only.
Now, he was still holding on to the Corvette after the divorce, so honestly, all his returns should have been audited from that point forward.
Yeah.
Yes.
And then, because he cashed in he sold the Corvette to pay off Dorothy's $5,000. Well, actually, what he did was he found out that she hawked their wedding ring, and he went and bought it back and gave it to her.
Yeah.
If you remember the story, but never mind that.
It's been a while.
I didn't think he sold the Corvette. I thought he gave blood or he did something else.
No, if I recall correctly, he sold the Corvette.
Sold the
I didn't think
Corvette.
He had it anymore.
Sold the Corvette, bought her ring back, gave it her ring, and then paid everything off.
I'll keep an eye open because Crystal's, as she works out, she watches the Golden Girls, so she's getting close to that episode. It's one of my favorites anyway. So
Book report.
yeah, this is my favorite line in there. I know I have $5,000. Uncle Sam doesn't like saying it. Aunt Dorothy doesn't like hearing it.
Yeah. No, it was the other way around. The
I know, I
IRS
realize.
agent said,
Yeah,
I
Uncle
don't
Sam
like
doesn't like
hearing
hearing
that.
that.
And she said, I don't like saying it.
Aunt Dorothy doesn't like saying it.
Yeah.
All right. What else we got here?
That's it.
That's it. Let's
Penalty.
Penalties. Let's just talk about this real quick because I want to get to the interest part of it. It's important for us to know because that's where we kind of get hung up. So let's just get to that interest. Of course, if I'm late and I don't owe, I don't get assessed a penalty for late filing.
Nope.
My penalty is I didn't get my refund on time, and that's my fault. But a late payment penalty is issued if it's 5% of the unpaid taxes for each month or part of a month that the tax return is late, up to a maximum of 25%. 15% per month, up to 75% if failure to file is fraudulent. I'm claiming that I didn't have to file, so on and so forth.
Right.
Most people are going to fall into this. It's 5% of what you owe
Up to
up
20.
to 25%, which
Yeah.
can be a significant number. That's compounded monthly until you get there.
So if you owe $500, it's 5% of $500 every month, up to $125.
If it's 60 days or more late, the maximum penalty will be $510 or 100% of the unpaid tax, whichever is bigger, whichever is smaller.
Mm-hmm.
This is the most significant part of it. So if somebody tells you, hey, I owe $1,000, I ain't got it, file a tax return anyway. Because this is the bigger penalty.
That's what I tell him.
Late filing, failure to file, that's a problem. And I can push this back. Failure to file penalty is pushed back if I file an extension.
Yep.
Now my failure to file starts in October, not April. If I filed the extension, which is actually tomorrow's lecture. Failure to file penalty, 0.5% of any unpaid tax for each month, up to 25%.
Failure to pay.
Yeah, failure. Did I say that?
You said failure to file.
Okay, my bad. Failure to pay, 0.5%. Big deal. I mean, yeah, it can be a big deal after time, but it's not that big a deal. 0.5% of what you owe.
50 months before you hit your 25% maximum.
Yeah. Now, this penalty is in addition to any interest charges on late payments, so it compounds.
Mm-hmm. It's a little less than 50 months. But even if it's 25 months, that's 2 years between your failure to pay and your interest. You probably doubled what you owe by not paying.
Now, I can get a waiver of these penalties if I can prove I had a good reason. Reason number one, I was in a coma at the time. Yeah, that's a pretty good reason.
Just in the hospital is not.
No,
Just being in the hospital is not going to be a good reason.
you have to be completely incapacitated. If you're just in the hospital and you're conscious lucid, you can sign a tax return.
Or you can request an extension.
Yeah, or you can request an extension.
At our end, if you're an existing client, you just need to make a phone call.
Yes,
I can take care of it from there.
yes. Yes, for an existing client, we do not need, for any client,
Yeah.
technically, we do not need you to come in and sign for an extension. We can file it without your signature.
I just need your vitals.
Yeah. I gotta go. I got a client.
Later. Well, I'm almost done anyway.
Yeah.
All right. So I think we've covered. All right. Law imposes a $5,000 penalty for filing a frivolous return. Frivolous return is one that does not contain information needed to figure the correct tax or shows a substantially incorrect tax because a frivolous position was taken or there was a desire to delay or interfere with tax laws. We ain't doing that.
That's why we catch them at the door.
Well, that's one thing, but also with double check. Every return goes through double check. Nobody's going to be allowed to take a frivolous position. We will talk about this. Most of the time we talk about it as we're doing it. That's why I like having somebody else in the office, because sometimes you just need that bounce. I need to talk to Shannon. Hey, what do you think about this? If at worst case scenario, I'll call Matt. Hey, what do you think about this?
All the time they go back and forth. I start cut, their store cut.
We're all the same, and the last thing, my goal is no IRS letters. I don't care how I get there. I don't want an IRS letter. I don't want my client to get an IRS letter. I don't want your client to get an IRS letter. We're going to file a correct tax return. They might not like it.
We like to listen to them as they come in the door, and if they go sit and they're talking to each other, and they're, you know, like even, especially for filing status.
Yeah.
It's like, oh, hang on, you know, my husband's calling, and then they come to your desk. No, I'm single-headed household.
Really?
You can't have them. That's 3 different things you're trying to file.
So which one's true?
Yeah.
No, I mean, I can make an argument that, well, yeah, I'm married now, but for last year I'm single. Well, yeah, there is a scenario where that can exist.
They do not choose.
Yeah.
You do.
We'll get into that a little bit on due diligence next time. Do we have any? Like we said, underpayment penalty. This is the underpayment penalty. This is figured quarterly. Remember, I have to pay 90% of my tax bill throughout the year. If I do not do that, the IRS will impose a 10% penalty on the amount I should have paid, but didn't, and they will figure it quarterly and compound it. All right. Again, that payment is. So there's a couple of ways. It's 90% of the tax or 100% of my prior year tax. So if I paid all of what I owed last year, but it wasn't enough for this year, I don't have to worry about the underpayment penalty. Because, you know, this is something new. If I started a business, a Schedule C, for the first time, I don't have to worry about an underpayment penalty because I had nothing to base a quarterly off of. I had no information at all. Okay? I do not owe an underpayment penalty if I owe less than $1,000. That's that magic number. The IRS likes $1,000. If I owe $990, great, I don't have an underpayment penalty. Even if I might have qualified for it in other ways, but at least I kept it under $1,000. Okay, well, we're fine. If I didn't owe any taxes last year, I did not file a tax return last year, I'm not due an underpayment penalty this year. Because again, I had no basis of knowing what my new tax load is. Something else changed. The computer will automatically do it for you if necessary. There is a form for that, 2210. And if you need to disallow it, there's a checkbox for 2210 saying does not apply.
So if you're in the negative, it'll ask you for that?
No, you have to actually go and search for it. It'll automatically apply it. You have to opt out. if you know that they should opt out. Now, if they filed here last year, chances are the computer's going to pick up on it, and if they shouldn't, then it should opt it out. But if it's a new client for us, you'll have to automatically opt out. You'll have to opt out on it. A returning client should get the automatic treatment. And I can also opt out because I think the number's wrong and let the IRS do it too. The IRS will be more than happy to send you a letter later.
I wonder if they sit at their desk and go, woo, I finally got one. Sit there and type it out real quick.
I mean, but it is an option. I don't agree with this, but I think they might owe. So let's have somebody actually take a look at it. And they'll take a look at it. This all has to do with figuring the underpayment penalty, which, again, it's just, we're looking at quarters. That's why the 25%. What we owed in total, 25% segments. Because, again, if I triggered the fact that I owe an underpayment penalty, it's figured for quarter 1, quarter 2, quarter 3, quarter 4. And compounded. At the underpayment, I mean, it's not, again, the percent of interest is not huge. Even when I've triggered it, okay, it's another $22 on the return. Okay. And remember, it's just a trigger. You already have to owe over $1,000. And it's automatically added to the tax return. When you look at Fusion, it says the client owes $10,000, $5,000, whatever. That number's already in there. When you print out the voucher, when you tell it to pay, it's already in there. I don't have to go back and add it. And if you actually wanted to fill out the form yourself, well, more power to you. You'll never see this because, like I said, when triggered, Fusion does it for you.
But this prints out with the packet information, if it's triggered.
I've never actually seen it part of that.
Because,
You should.
If by chance someone says, well, how'd the program figure it? It's like,
Here's your form.
Yeah, let me go through, review the
Again, in some regards, it's such a rare occurrence because a lot of our people, they owe, but they don't owe, a boatload. Yeah, there are some clients that we know, like, clients I mentioned earlier. They owe a boatload. They always owe a boatload. It should be on there. I've never gone looking for it because they never question it. Because they know they owe. And that's why most people aren't going to be questioning it. They already know they owe.
Yeah.
They knew that.
They owe for the last 5 years in a row. But yet they got 5 kids, and they still don't do anything like that.
Yeah. But they know they owe. So you give them a number, but you owe $3,200. Okay.
Yeah.
Well, I figured about as much.
I don't
Okay.
know. What kills me is I'll just write a check for it. Can I be adopted, please?
Well, I mean, we're power to if you do that. All that means is I borrowed $3,000 from the government. Yeah. Big refund, not always the best idea. Owing big, not the best idea either, but at least you borrowed some money from the government. You can request a waiver, but again, you're going to have a good reason. Some of it's just because, well, this is new. Something changed substantially and they didn't know about it. And it really threw off their figuring. Something bad happened. Something good happened. I won the lottery. I had no idea. I made an adjustment. I made a quarterly payment. Turns out it wasn't enough. I tried. The IRS might actually listen to that argument. Well, you did send it quarterly. It was just short, This is not important. $88.79 when you're going to file electronic return. We're all familiar with this one, at least People that have filed electronically, this is where the signatures happen. Nowadays, it's just a number on there. The signatures don't really appear.
Which is funny is that signatures has been one of the biggest issues for us in our office this year. People don't understand the email for DocuSign.
Yeah, that's the good. That's the good and the bad about technology. Some people just don't follow along.
Some think they're so computer educated and then they do it so fast.
Yeah.
They're skipping things.
Yeah,
It's like
yeah,
slow
yeah.
down.
Read
Yeah.
what it says.
I did that already. Well, you did it too fast.
Yeah, no, you didn't.
Try again. Yeah.
Or you hit that submit twice and it skipped a step, and you shouldn't have. So 8879 up here, just a quick version of it. This has the taxpayer's name, the spouse's name, the social security numbers, AGI, total income, what they owe or what their refund is, and then their signature, the date that they signed, and then a PIN, a personal identification number. Generally, it's automatically generated by the software, but if your client has a number that they want to use, you can change it. Well, I always use this number because it means something to me. That way I know that I actually did something. Hey, I'm fine with that. I'll change it to it. I can do that. Don't confuse this pin with an identity protection pin. Those are two different pins. So here's one that's kind of filled out. Oh, it's kind of weird. You know, authorizing us as Liberty Tax to file their tax return. There should be a number. When it's actually all said and done, there'll be a number here representing the signature and the date that they signed it. And then down here is Brett's signature as the ERO. At one time it was ours as the tax preparer. But a couple years ago it changed to the ERO, which is Brett.
But if we do an out of state, we sign.
Some
do,
states
yeah.
require the preparer to also sign. Oklahoma is one of them. Which once you sign, you're signed. If I have to attach some forms that I can't electronically file, but I can electronically file the return, but I have to paper file some forms for support, I need this form here, 8453, to attach to those paper forms so that when the IRS receives it, they know what to do with it. This is a cover sheet, basically. I'm mailing this in with the forms that I'm required to mail in, so they can attach it back to the return that it needs to go with.
Does that have missing W-2 on there?
No, because that's not something that's covered. But like I said, not all forms have supporting documents that can be electronically filled. It's gotten a lot easier because now we really, I think it's a rare day when we'd actually have to do this because we now have the ability to attach a PDF to our returns, which supersedes this. But not all software would have this. And going backwards, there's a point where I would have to do this because attaching a PDF to it would not be an option. So every time you've got to attach a PDF, thank God, because then you'd have to do this. Otherwise, you'd have to do this. Electronically filed returns that are rejected is not considered as filed by the IRS. Well, that's somewhat of a problem if it's April 15th, but it's not as big a problem as you think because even though the IRS does not accept the return, they do recognize the fact that an attempt was made. They give you 3 days to fix it without being late. Hopefully, it's a simple fix.
Biggest problems, 1095 days. What was our other one?
Somebody being
IP
claimed.
pin.
Yeah,
IP pin.
IP pin, or somebody being claimed on another return. Alright, so that just covers that. This is something we'll talk about later. And I'm not going to go into state returns because that's specific. Each state has their own way of doing things.
And we'll work on that with you.
Yeah.
That's more of a hands-on thing,
That's more of a we deal with it as we need to thing.
like homestead.
Yeah. All right. See you next time for the last class.
And I'm not doing record class this time.
Oh, come on.
Matt already said I didn't gotta
What
go
the
out.
hell?
Matt said I had to go out there and do testing and stuff,
If it's up.
right?
Oh, well, it should be.
It should be up by that.
I was
Never
gonna
mind.
say,
So
I
when
remember
is the
last
supposed
year.
official opening?
Do you know how bad I want to
For
ask
what?
corporate?
For our testing.
I
I'd
really,
love
Shannon,
to
just
see
submit a
it.
ticket.
I'm going to ask them.
Because
I almost
I've
did this
seen
morning.
3 different damn dates